Hey everyone, welcome back to another Market Open live stream. So today we have green indices. However, we thoroughly expect the dips in this market to continue at the very least until we get through to about October 18th. And that is because on October 18th, we expect our debt limit crisis to be resolved, though it could end up taking a few more days given how slow Congress tends to be. We also expect to know the size of the infrastructure package, which we now think will be somewhere between 1.5 and $2 trillion, which is a far cry from the $3.5 trillion that we were originally facing. We also expect to get, we don't expect to get, we will get CPI data on the 13th of October. We'll get jobs data this Friday. So we're going to have a lot more clarity on our economy within about 13 days here, which is good. That's what we want. We want clarity. We want more confidence in what's happening in our markets because that enables us to have market rallies. When there's too much uncertainty, you can't really have a market rally because there are too many people nervous. And nervousness, though, creates opportunity. I like that kind of opportunity. So even though we do have green indices today, including the Dow futures being up about 0.49%, S&P futures up 0.46%, NASDAQ futures up just over a third, 0.37%. We do still have a lot of stocks that have sold off a good chunk yesterday. So in my opinion, for certain cases, it might not be too late to buy, so to speak. For certain things. Of course, not blowing every bit of available cash I have, though I will say I've gone from, I want to say about 3 or 4 weeks ago, somewhere around $5.5 million of available cash, because it's just closed so many option contracts and I was selling so many puts and selling so many calls, and then reversing a lot of those by taking gains in the last couple of weeks, and then reinvesting those into stocks that I'm down to only about like 1.7 left, which I say only. I know it's still a lot. But my point is my available cash position has gone from like 25% to like 8%. So anyway, whatever. I think the point is I'm buying the dip. That is, of course, why the coupon code link down below is Diamond Hands, because you buy the dip and then you Diamond Hands. But anyway. So, okay, what else we got going on? Look at this. Oops, that's not what I wanted to click on. There we go. Let's go ahead and click on crypto. Look at crypto here. We've got Bitcoin knocking on the door of 50,000 here on BTC. Ethereum up to 34.4. Wonder how Cardano's doing. Let's see here. Let's go to CoinMarketCap. We've got Cardano sitting at 222, and some trending tokens here like Tron, Rainbow Token, and Cody. With some other tokens listed here as well. Yeah, but okay, let's also see oil here. Oil up about 1.52%. Brent up another 1.72. These are different blends. Typically, the more U.S. blend just being labeled oil, and Brent being a little bit more of a Euro and U.S. blend. You've got bonds, 10-year Treasury sitting at 1.5, still stable. This stable 1.5-year bond. I'm sorry, 1.5. The stable 10-year Treasury bond yield is actually good in terms of inflation expectations. So let's see here. Okay. Then we've got, let's see here. Okay. We're going to look at crypto here in just a moment as well. Yeah, we'll come back to Yellen here. One thing that I want to say that I found very, very incredible about crypto so far, and I've loved it, is that crypto has been incredibly resilient, even yesterday, as we've had a lot of a tech sell-off, which is very interesting because we're starting to see crypto disconnect from the association with technology stocks. Previously, it was that when you saw cryptocurrencies do well, tech was often doing well, and when tech was doing poorly, crypto was doing poorly. That has been pretty broken in 2021. Here in 2021, we saw tech start really suffering in February, and crypto really started taking off in about February. I mean, it really started taking off in like late November, December, but it took off through February into April and May. That's where we had our crypto peaks. Of course, we troughed out in the summer, which the summer wasn't horrible for tech. Tech was recovering or trying to claw back in the summer, and you had crypto bottoming out essentially. And now you've got crypto really disconnecting from technology and the technology sector in general. As yesterday we had a devastating day with the Nasdaq down over almost 2.5%. And crypto didn't miss a beat. Crypto was essentially straight up yesterday, which was really incredible to see all of the indices so bloodied and nervous yesterday. Yet crypto continuing to push up again. Yesterday was the fourth, and so take a look at the fourth here. When the market opened, you had some. Actually, I mean, the market opened over here. You had some pain right before market open, which is very interesting. A couple hours before market open, you had a little bit of pain, but beyond that, the rest of the day, it was straight up for crypto. As you know, compared to the indices having much more pain, which I thought was really incredible for the larger ones, of course, like Bitcoin. I don't want to speak too broadly about every single coin, but yeah, to have a, let's see here, let's look at 10.4 as well over here. Yeah, 10.4 right here, same sort of sell-off around 7:30, but otherwise straight gains right into today for Ethereum, for Bitcoin. Cardano has been bouncing around this 220 range here. Maybe not so, almost a little bit of a decline going into the fourth here. Maybe Cardano playing a little bit more with the technology stocks, at least yesterday. But certainly, when we look at crypto, it's disconnected. And what I believe a reason for this is crypto, I think, is trading a little bit more right now off of Evergrand fears and the Evergrand crisis compared to what's happening with the debt limit. I think the stock market is a little bit more sensitive to the debt limit, and crypto is a little bit more sensitive to Evergrand and the property crisis that we have abroad. Those are just my expectations, and so that's sort of, or maybe rather than expectations, maybe they're rationalizations. I don't know, but that's how I feel about them. So, okay, good. Let's see what else we have here. We've got, let's see here. Okay. Oh, we've got a big whistleblower going into Congress today on Facebook. That's going to be interesting testimony. Let's listen in here for a moment.
Thing which is really inciting. It's why I took that damn Bitcoin and went and bought a place in Pennsylvania. You never find. Not that you would do any of those things. I would. No, can I just say I'm serious? I can't have the Summit police be bodyguards, okay?
Is Jim rationalizing why he paper-handed crypto?
Ill-advised for Dorsey to pile on there. But
Right,
as for the financial impact, it's fairly significant, which just shows the power of the platform. 6 hours, that's a lot of money.
No, but I'm saying that if you want true bullet, just go to Twitter. So, like,
okay, all right. So I'm gonna pull off the ranting here for a moment, and I'm gonna go ahead and hop on over into this here for a moment. Let's see. So take a look at this. I found this very interesting about Tesla. So here was just a small note on Tesla, which there's been a lot of FUD about Tesla and battery fires, battery safety. And we've got an automotive report here. This was in the New York Times this morning. I yanked it out of the paper. It says here, the federal government's top auto safety regulator has declined to open a formal investigation into the fire risk associated with Tesla vehicles and fully charged batteries after finding, listen to this one, folks, quote, no relevant incidents in the United States in the last 2 years. The National Highway Traffic Safety Administration received a petition in 2019 requesting an investigation following reports of fires in China that started after certain Tesla vehicles had been charged at one of the company's fast charging stations. Superchargers. Gotta love the superchargers. Anyway, in documents posted on the Federal Register, the agency said that it had found no incidents in the U.S. since receiving the petition. The available data indicate, and this is a quote, the available data indicate that non-crash battery fires in Tesla vehicles are rare events. That's good. non-crash battery fires. So like the car just bursting into flames like GM's car for Tesla is very rare. Good. Electric vehicles made by Tesla and other manufacturers have been found to sometimes catch fire if their battery packs have been damaged in accidents. These high voltage fires generate intense heat and can be difficult to put out. Now, I kind of dispute the difficult to put out thing, just mostly because I feel more and more fire departments are becoming well versed in how to handle fires related to EVs. To the point where, remember the news about the crash in Texas, where it was said that there was a driverless Tesla that crashed into a tree, burst into flames, and killed the 2 people in the car, and nobody was found in the driver's seat? The initial news headlines, including from the Wall Street Journal, were that this car was on fire for 2 hours before it was able to be put out, which was incorrect. The car actually, and the fire department later clarified this and said, no, that's incorrect. The car fire was put out within 2 minutes. The fire department just had somebody hang out there for 2 hours to make sure it wouldn't reignite. That's different, obviously. I mean, it's still like a pain in the butt. It's like, okay, he's still hanging out there, right? But it's much better than like actively fighting a fire for 2 hours. If the fire could be put out in 2 minutes and it's an EV, I don't know how. I mean, it's probably a little bit more challenging than just being able to douse it with water. I mean, you could probably put a car fire out in 30 seconds with water. So, okay, maybe it takes a little bit longer, but, you have to switch to a different chemical or pick a different hose. What do I know? But this is good. This is good news for Tesla. And so I like hearing that, especially since there's so much FUD around the batteries, which I always hear that people will change when it comes to the Tesla batteries. People are going to change. People will get over the fear people have. All right. Let's see here. I know a firefighter, and he told me to stay away from Tesla now because it's hard to cut you out of the car. That's an interesting statement. I've honestly never even considered buying a car based on how easy it is to use the jaws of life to get me out of it. That sounds terrible. And yeah. Now, I know you don't put out electrical fires with water. That's why I said it's 30 seconds if you just use water, and it's probably longer because you got to use like a different hose and use foam or whatever with that. All right, let's see here. So let's see. Okay. Okay, I understand the deflation versus inflation argument. I don't really believe companies have increased their efficacy or efficiency rates to negate inflation. Yeah, I agree with you for now. I think what my argument more is that we have high inflation now that pushes prices up, right? And companies are becoming substantially more efficient. So let's say like the bottom here, right here, the top of this message is sort of baseline, okay? So prices go up substantially and company efficiency goes up, let's say even 50% just for the sake of argument. When this inflation relaxes and we start seeing a U-turn in prices, my expectation is even if prices remain elevated above where they were, efficiency will end up topping out pricing. But yeah, no, like right now, it's things are much more pricey. Yeah, let's see. All right. Okay. So let's go ahead and take a look at what the pre-market's looking like right now. We have the stock market right here. Fine. Let's take a look at some of our favorites here. We got Shift Technologies. Bought this yesterday as part of our pie. Up 5.14%, which reminds me, a lot of folks now referring to the Manheim index. A lot of folks first heard this from Kathy Wood. A lot of economists are talking about this. It's the used vehicle index. People are kind of using it as a way to gauge existing inflationary trends, and we've got a little bit of an inflection point here, okay? And it's not the kind of inflection point that we really want. So remember what we want, folks. We want prices to come down. The problem is prices for things like used cars have shot up sky high. And the expectation was that these used car prices would fall and essentially rotate back down. So, for example, you might see 10% inflation, 10% inflation, 10% inflation as you're curving up in used car prices. And then after this curve up, you would expect to see some sort of decline as prices go back to normal. So maybe you would see 0% inflation, and then you'd see -2, -3% inflation because prices are coming back down. Well, this thing's gotten really popular, and it's called the Manheim Index of used vehicle prices in the United States. And unfortunately, for inflation expectation purposes, we've just had a little bit of a negative catalyst here in the Manheim Index regarding the latest update. The latest update in the index here is dated September 30th. And unfortunately, take a look at this particular chart here. It's not so good. So this is your index of used vehicle prices here. You see this crater here during the pandemic recession, the start of the pandemic, of course. You saw used car prices jump quite a bit in the summer of 2020, but it really wasn't until about February and March of this year. And this is really when inflation fears skyrocketed. We were pretty happy to see that inflation expectations, used car prices, rather not inflation expectations. Used car prices really plummeted here in they peaked out around May, and then this is June right here. This is July. This is August. This downtrend was very, very good. This is something that a lot of folks were pointing to, saying, "Hey, look, inflation's going away. We're rotating back down. This is perfect. Don't worry. Inflation is transitory. It's here today, and it's going to be gone tomorrow," kind of thing. Well, unfortunately, this latest update here that just came out for the Manheim Used Vehicle Index is suggesting a continuation of high prices. But also, it's worth noting that a continuation of high prices in this index here, so maybe that's not the perfect way to say it, it would really represent flatness, right? If prices were to continue being high, you would see prices bob around the shelf right here. But what you've actually seen is an inflection point down, a brief stabilization, and then an inflection point right back up, almost as severe as what we've had in May. This, folks, in my opinion, is actually a very negative indicator for inflation readings that we're expecting to come out on October 13th. This creates a little bit of cause for concern, because really what you have here is about a reading of 190. Well, let me tell you the exact reading. I can do that. You have a reading here of 194.5, and the present reading is 201.4. So in terms of used vehicle prices, you're sitting at about 3.55% inflation. Now, the good news is that's not like 7 or 8% again, but it's certainly not what we've had here, which was negative. And so remember how CPI is calculated. CPI has many things in the basket, and as certain things are negative, they can draw down the entire index, and then you have lower headline inflation readings, which means less FUD, fear, uncertainty, and doubt, hitting the markets. But when you have something like used vehicle prices that you're hoping are going to continue to trend down, but all of a sudden they trend back up, now you potentially combine the fact that you might have higher rents, higher wages, higher service costs, and service cost inflation, plus a return to higher vehicle prices in the form of at least used cars based on this index, and you have a potential problem. So this is not good. This is a screenshot, of course, from Bloomberg, so shout out to Bloomberg. Thank you very much for that. But yeah, this is a problem. Personally, I believe that you really do face a risk of a higher inflation reading on October 13th after having seen something like this. Now, it's not what I want. I would love to see inflation come in lower than expected. In fact, we'll go ahead and pull up inflation expectations just to see what we have for October 13th, because it is coming up. We'll also pull up jobs expectations. So let's start with jobs expectations here really quick. We have jobs expected to come out this Friday. We last month had a complete miss, and that helped solidify why we did not end up tapering in September, and we're delaying to November for the taper. Last month's jobs report came in at 235,000 jobs. It is possible that last month's jobs report was low because we had fear around Delta. There was a lot of fear around Delta. Really, at the end of July, the fear began. August was a very, very fearful month. And so it's not a surprise that in September's jobs report, which reflects data from August, we would see a very low reading. We do now expect 488,000 jobs. I hope to beat this. That's the non-farms payroll. We expect a beat on private payrolls as well. Hold on one second here. Yep. Okay, perfect. So non-farm payroll, 488. Change in private payrolls, 450 we're expecting. Change in manufacturing, 25K we're expecting. Unemployment rate, we're expecting to go down 0.1% to 5.4%. And take a look at the wage-based inflation. We're expecting 0.4% on wage-based inflation, which 0.4%, worth noting, if you just type 0.4% times 12, that'll give you the annualized rate. That's an annualized rate of about a 4.8% increase in wages. Now, let's also go ahead and jump to the 13th here. That's when we're going to get CPI data next week. So CPI data, the expectation next month is, based on last month, next week is expected to be 0.3% for a month-over-month inflation reading and a year-over-year headline number of 5.3, which would be stable with last month. I personally have been hoping for that number to actually decline substantially, for us to see like a 4.8, a 4.7, a 4.5. But I have to say, with this Manheim used vehicle index rotating back up, that does throw a little bit of cold water on my hopes for a lower inflation reading, which could potentially signal some headwinds for technology stocks, as higher inflation readings usually do, but also could be something that ends up being decent for crypto. Crypto does seem to move on or around CPI dates. And it's worth noting that if we get a higher than expected read here on CPI, we could see a benefit or a stronger move in the crypto market. So we'll pay attention to that. But just like we've seen here, this sort of, it's, you know what it's almost like? It's almost kind of like this is the Delta dip right here, which is kind of weird to think about. Because this is the September reading, this is the August reading, this is the July reading. It's literally almost like you have a Delta dip in here, and you're just going back to where you were. So fascinating. I love it. Fascinating to look at the data. Not the result that I want, but it is the fact, and this is why you've got to always let the data speak. Don't be emotional about it. If you're wrong about your expectations for data, then you want an easy solution, change your expectations. But you got to listen to the data. So that I find is very interesting. Let's now continue to move on to stocks here. We've got Lordstown Motors getting beat up again here, about 7.69%. Camber Energy rotating back down as well, another 259. Woo! It's coffee time. I have not had any coffee yet, and you know what that means? Coffee time. Cheers. All right. So this is my level 99 range coffee here, by the way, in case you haven't noticed. Thomas Müller says, that's why I have a BMW convertible. Well, I don't know what you're talking about in terms of why, but I remember my dad's girlfriend, when I was in high school, had a BMW convertible. I think it was either a 3 or 5 series convertible. It doesn't really matter. It was the BMW convertible. And I would always want to drive that to school because I also lived in Florida. And I'll tell you, people talk about, I can see here, you can live on coast. I don't know about the other thing you said there. But anyway, I will say, I mean, minus the rain, I would rather drive a convertible in Florida than in California. This is cold. When you drive a convertible and 70 degrees outside, it's cold because the wind chill takes that stuff down to like 60. You drive a convertible in Florida and it's 85. it's like 75, you know, with the wind. So it's beautiful. Yeah, Florida's convertible weather. Yesterday we had our first thunderstorm that I've witnessed here in Southern California in like 5 years. We actually had lightning. It was so weird because back when when I first moved here, my first class in high school that I ever took here in California was right after I moved from Florida, and people would stop class when there was lightning to go outside and look at the lightning. And I come from Florida, and I'm like, losers. I like just go to Florida for a day, and you'll see lightning and thunderstorms. Yesterday, I'm like, oh, lightning, and I'm going outside. I'm like, oh, I've changed. That's crazy. Different world. But anyway, so Ocugen moving up here, 7.11%. Shift Technologies probably up on this Manheim index update, which is kind of interesting. We've got Smile Direct Club coming back from the grave a little bit here. Hut 8 Mining popping up a little bit to 9.61. We have Moderna 1.8 after some pain over the last few days here. There we go. Moderna 1.6 now, bouncing around. Owlet coming back to a little bit. Actually got some green after a 23% sell-off yesterday. I actually bought the dip on it yesterday because I thought it was insane in terms of why it's shocking. What's shocking? That's true. You got to wear sunscreen if you're driving around during the day. Solar City fine. Really? Okay, I'll have to look into that. Miami, the Keys, and some of the West Coast. Tampa. Okay. Anyway, so let's keep going here. Canoe. It's surprisingly there's not actually a lot of movement right now. This is why I started off the live stream saying like, hey, like some of the prices are still lower than the insanity that we had seen. So I personally don't mind picking up a little bit more exposure. And of course, if you're in the Stocks and Psychology of Money group, you already know if I set myself up a trade this morning, which as usual, you get all my buy sell alerts, exactly why I'm doing it, how much I'm doing. I'm starting to try to also include like percentage of portfolio to try to make that a little bit more clear as well. So, but yeah, we got the opening bell in about 40 seconds. Check out that program link down below right next to the link to get up to $70 totally for free with Public. Go to metkevin.com/public and you can get up to $70 for free using or signing up for Public. It's a stock trading application. And let's see here. I want to take a peek. They don't buy or sell your information, but I also want to take a quick look here at Public. And we're about to open up here. Yeah. Okay, perfect. We'll just hop on over to the opening bell. There's nothing else to mention here. Okay.
Crocs has been an incredible stock. I have yet to meet a person when they're at Crocs one who doesn't apologize for wearing Crocs, but then says they're so darn comfortable. I don't care.
All right, let's see how green it is today. Here it comes. Oh, that's going to be 90%. Yeah, 80, 85.
Did you see that they did that? Beyond Meat is not a fan favorite of the team.
Nice. That's a solid green day so far today. We'll see if it lasts, folks. We've seen a lot of green starts to the market, only to turn red shortly thereafter. We'll see. 4:30 on the SPY. We'll keep an eye on exactly where this goes. Let's take a look at the opening minute here on AMC. AMC rotating down on the opening minute. We've got Tesla flat on the opening minute. We've got the Goog rotating up nicely on the opening minute, but only about 0.25%. Enphase up about 0.4%, but showing a red candlestick to begin here. We've seen a kind of rough downtrend here on Enphase. I got rid of most of my options. Actually, I got rid of all of my call options that I had around $190. And I started buying again right around 158. I've bought the dip at 149, at 153. And I'm very closely watching Enphase, which is a very sensitive stock to the supply chain crises, chip shortage, freight shortages. So we're sitting at right now at about 145.32. Continued dip here to me is a blessing. I want to make that very clear. It is a blessing because I want to own more of this company and not less of this company. It is. I actually just did a percentage thingy here. It hasn't updated on. I don't know what's wrong with this computer, but for some reason iCloud just does not want to sync on this computer. But that's okay because I have it right here. So right now, end phase for what it's worth is end phase. There it is. 6.95% of my portfolio, or about $1.283 million. And I want to bump that a lot. Does that percentage include options? That percentage does not include options. So options would add make the portfolio larger. That's just stocks. So that means my exposure. I don't know if I have options on end phase. I'll have to check if I have options on end phase. But anyway, I've got a few $1 million of options as well. Okay, but anyway, so we're watching end phase. Actually, now just turned green candlestick over here. But definitely looking for opportunities to keep bumping my exposure to it. Personally, I don't even mind buying it right now because it's a great price right now. Tesla, 0.59%. We looked at Google. How's the AMC again? Just take another look here. It's rotating a little bit to the downside. We have, let's try Dave & Buster's. How's Dave & Buster's? Just to see how recoveries are doing. Slightly down here on recoveries. Mattel, Plug, Merck is actually down on its COVID pill. What else is rotating down? Bed Bath & Beyond, Roblox coming down a little bit. Shift Technologies rotating down after being up. I wonder if this is an omen of what's to come for some of the other stocks here. You've got Affirm moving up very nicely here. That looks like very nice growth on Affirm. Very nice growth on DocuSign. Good. I'm pretty sure we bought some DocuSign yesterday, which was nice. We've got, let's see here. Actually, let's see here. Yes, we did. I bought 200 shares of DocuSign yesterday. And then somebody told me to charge my phone, which I did. It seems like anytime it's red, people feel like, that's it. You have unlocked the ability for me to tell you what to do. Good. We're keeping an eye on this. Again, looking for an opportunity by the dip. Thoughts on Peloton? Yeah, so Peloton has had a nice drawdown here. And how's our market cap on Peloton right now? Let's take a peek at that. Peloton stock. So Peloton right now is sitting at about 24.75 bill market cap. Peloton. We'll look at forward here really quick. So if I grab 2025, so we expect to go profitable in 2024 at Peloton, 128 on earnings in 2025. Puts us at about 64 times forward. Still very pricey for what I expect to be slowing growth, compounded annual growth, probably going to be averaging somewhere around 25% over the next 5 years, but potentially less. It's still on a little on the pricey side. I think, yeah. I mean, we're so close though to 79, and 79 is where they fell to after their lawsuit happened. I bought a lot of Peloton at 104 and 79. Then it skyrocketed, ran up to like 120 or whatever. Started seeing some changing indicators for Peloton. I actually sold out all of my Peloton position between somewhere around 109 and 113. Closed out everything that I had in Peloton. Now I don't own any. Would I be open to reestablishing a position? I'm not opposed to it. And I'd prefer to be closer to 80 than 120. So I'm not opposed to it, especially going into the winter cycle and going into, maybe the exercise euphoria that I expect we'll have in January. So definitely not opposed. But probably not jumping up and down at doing so right now. How's the SPY doing? Because I'm seeing some more things move green here. S&P 500 is moving very nicely actually right now. Good healthy movement up, and phase as well here. Let's see here. If I have the buying power, I'm actually going to buy I'm going to buy some shares here. We're going to do 350 share purchase of Enphase right now. I'm really trying to build my position on here. Most of my stocks are elsewhere. There we go. Okay, perfect. Okay, so adding 51K to Enphase at, what is it at, 145-ish? Perfect. Whole about something portfolio and total Edward Love. Edward Capital. Okay. Perfect. So let's see here. Let's go ahead and see what news we've got. All right, perfect. So now we're going to go hop on over to, let's see what news headlines we have. Yeah, I see your comment about never buy or sell in the first hour or half hour. I don't necessarily agree with that. But hey, to each their own. Okay. So let's see what headlines we've got elsewhere here. And if it falls more, I would buy more. So, all right here. Chinese tech benchmark on the brink of fresh weakness versus the NASDAQ. China orders banks to ramp up funding to boost coal output. Let's see here. Let's see what's inside. You know what I really want to know is what's new with Evergrand. That's and the Chinese property market. Yes. Folks, let's get an update on Evergrand because now we've got a new default happening. I read about this morning here, and I want to share it with you. Take a look at this. China junk bonds sink, which, remember, junk bonds are really often referred to as just high yield bonds, and they're higher yield bonds because they're riskier on wider payment stress. Evergrand update. So let's take a look at this. China's heavily leveraged property firms saw their stocks and bonds tumble after a failure of property developer Fantasia Holdings Group to repay notes, deepening investor concerns about the sector's outlook. So here you go, having yet another property developer having having issues and failing to pay their bonds coupons, regular coupon payment or regular payments for bonds are known as coupon payments. That's really because back in the day, you used to clip a piece off the bond, and that was sort of your coupon to redeem your payment. But anyway, China's dollar junk bonds fell about 4 cents according to according to traders, set for the worst drop since at least 2013. Developer Sunac Holdings Group long-term issuers. Or their long-term issuer default rating was cut to C from triple C by Fitch Ratings. So C is actually worse than triple C. If you could just Google bond ratings to kind of see this, and it'll show you like AAA, AA, A, and I'm not talking batteries either. Here, Investopedia's got a little thing on it. There you go. Look at this. So you could see that C is, at least according to Moodys, the worst rating that you could get for a bond. And Standard & Poor's actually calls this a D rating. So this is not good. You've got a lot of stress in the property market, which in some sense, it makes sense that you would have stress in the property market after Evergrande because you've got a lot of banks unwilling to extend credit to property developers right now unless they can prove themselves beyond a reasonable doubt that they're not going to default. It makes a lot of sense. It's typical market risk aversion, very, very normal. Yeah, unfortunately, that hurts a lot of the other developers. Now, remember, China has a lot of responsibility to bear here because China essentially pulled out the rug from Chinese property developers by at first saying, we need lots more housing, much more housing. Here, we'll give you crazy financing terms. And then last August, U-turning, saying, no, we actually want to tighten up lending terms. And that made companies that were using the prior qualification standards no longer able to qualify for new debt. And a lot of the property firms in China were essentially growing by borrowing more, which is obviously not the most healthy way to grow, but they were also trying to fulfill what the Chinese Communist Party wanted. So I'm not saying that the companies are are not to blame. They're definitely to blame in part. But the CCP also has some blood on its hands, so to speak, when it comes to the property crisis that we're seeing. But it's interesting to see this continue to brew because, a lot of this sort of fear, uncertainty, and doubt has sort of left our attention over the last week. We've been focused on more Congress, I would say. About 2 weeks ago, Evergrand was front page news on everything, right? But continuing to see some of these troubles, so to speak, is something that we should pay attention to. Let's do a quick Google here for the Evergrand property stock, still suspended on 3333. The last time we traded was on September 30th. Let's go to 6666. Hong Kong, also still suspended here on the Hong Kong Stock Exchange. And that is pending a pretty large acquisition within the Evergrand group. Troubles at Fantasia continue to contribute to signs that stress is rising in China's property sector, where lower-rated developers face a surge in bond yields. This is bad too, because again, if bond yields are going up, it's harder for them to raise money. Remember, folks, when you are a company, when you're a public company, the purpose of being a public company is not solely to make your investors money. It's for you to raise money. So if you're a property developer and you've got $10 billion of assets under management, and you're like, hey, we want to do a new $1 billion development. Let's go raise $500 million. You can issue bonds or you can sell stock. But if your stock's sold off and nobody wants to buy your bonds unless you're paying nosebleed interest rates, then it's a lot harder to raise money and actually operate. Remember what Carnival Cruise Lines had to deal with during the pandemic? They were getting loans of 13% or something totally ridiculous. Uncertainty over the full extent of China Evergrande Group's debt load beyond its more than $300 billion reported in liabilities has plagued investors since a liquidity crisis at the firm stoked fears of a collapse that could trigger a financial and economic contagion. Fantasia itself poses fewer risks to broader markets than Evergrande due to its smaller size, ranked 60th on a list of contracted sales in the first quarter versus third for Evergrande. Fantasia's total liabilities are around $12.9 billion, so that's a fraction, obviously, of the size here. I mean, you're talking about what is that, 3-4% of the size of Evergrande here, so much smaller percentage here, and not good to see them missing payments, but things to pay attention to. Shares of Sunac China Holdings dropped as much as 13% on Tuesday. Hong Kong listed real estate firm is due to pay almost $100 million in coupons this month. The developer's bonds have fallen to record lows after a letter circulated among traders last month showing Sunac asking local authorities for help. They're already asking for bailouts. Sunac had denied it submitted the request. Well, sure, that sounds embarrassing. And I don't know, sometimes I feel like transparency isn't exactly a thing that we get a lot of in China. Now, it's not a diss on Chinese, okay? If you're Chinese, it's not a diss on you, just saying. There's definitely a cloud on Chinese media versus what we have in the United States. Not to say our media is, gosh, you have to be so qualify when you say this stuff. It's not to say our media is any good, but I think it's certainly a lot better than what we find in China. Evergrande's likely default won't hurt the credit profiles on China's local governments. S&P Global Ratings said in a local report. This is good, and this is one of the things that we actually expect to help us ease out of this Evergrande crisis is the opportunity for local governments to actually partner with existing developers who take over projects from Evergrande or other failing developers. So this is good. The last thing we want is local governments to show that they're showing issues, because that would be a sign of contagion, right? And the troubles are unlikely to pose contagion risk at the local government ladder, nor significantly to undermine social stability. This is very good. And we talked about this 2 weeks ago. I said, I doubt this is really going to explode. You can go back, look at all my Evergrande videos. I say the same thing in all of them, that this is going to blow over and the fear is going to go away by the dip. Evergrande shares to stay suspended as awaiting that major transaction, according to Hong Kong Stock Exchange rules. Singapore banks loans to Evergrande insignificant, so less exposure to Singapore. Fantasia Holdings skips bond payment. We talked about this one already. And okay. And then this was a Hobson Development grabbing a 51% stake. I want to make sure this was very clear, because I may have actually, I think I did inappropriately discuss this yesterday. Hobson Development is not acquiring a 51% stake in Evergrand total. It's just the Evergrand Property Services. So I believe this is the property management division, but I'm not 100% sure. But it's Evergrand Property Services, which I believe is that 666? It might be 666. Let's just do a quick little look here, just to grab it here. It's all quite honestly confusing, the different names they use. Yeah. See, it's 6666 Evergrand Property Services Group. That is not the main Evergrand, which trades under the ticker 3333. Gosh, imagine if those numbers weren't the same. Could you imagine having tickers that are like, oh yeah, I'm going to buy stock in 3572? Like, what? But fortunately, we don't have that issue, and these numbers are relatively easy to work with. But anyway, so this gives us a little bit of an update on Evergrande, that you do have wider issues again happening at other developers, but still the risks seem to be relatively contained. And quite frankly, I hadn't even thought about the liquidity potentially of local governments. So it's very good to see that the S&P 500 is, or not the S&P 500, Standard & Poor's is suggesting positive liquidity for local governments, well capable of helping local developers bail out of this property developer crisis. So the market does appear to be doing very well. Happy to see this right here. We've got Enphase that was initially trading flat. I did just buy some more Enphase. Now up a little bit here. We've got Affirm moving up another 2% here. Very nice movements on Affirm. Hut 8 Mining back over $10 here. Also very nice movements on Hut 8. Upstart back over 300. The Trade Desk up 3.3. Shift Technologies up 3. EXPI up about 3. Palantir coming 2.6. Lemonade coming up 288. Honestly, this is still, in my opinion, a deal on Lemonade. This is another one. Actually, I'll take a quick little look here on Lemonade. Lemonade. Oh, we gotta work on that. We gotta work on that. So we're gonna do that right now. Let's go buy some lemonade. I'm buying some lemonade. I don't know. How much do I want to buy? I don't know. Oh my gosh. Why is it all... I didn't do that. I definitely didn't do that. Obviously, I did do that, but I feel like I didn't do that. I feel like I'm not responsible for what happened there. Yeah. Anyway, I don't know. Let's get like 1,500 shares. How's that sound? Yeah, that sounds good to me. That's definitely going to lower my basis in here. Fine with me. Okay, good. 956. So that's okay. Adding 95.6K. All right. To 63-ish. And that is right now only about 2.58% of portfolio plus this portfolio, not including options, plus this purchase. Holla. All right. So what else do we have, ladies and gentlemen? Well, we have Volta is down 4.37%. Roblox still rotating down. Hippo sitting at 438. Dave & Buster's at 0.22 to the downside. Did a little bit of a Hippo trade yesterday. Send an alert out for that. And Stocks and Psych of Money, of course. Link down below. Use your Diamond Hand coupon code. And, of course, get yourself a level 99 range mug. Actually, I think I got this off Etsy. I have no idea. It has nothing to do with me. But they're still cool. Michael wants to know where all this cash is coming from. Well, so back in, I'll answer that. So back in April, on April 20th, 2020, I sold like $10 million worth of stocks, and I bought about $4.9 million worth of option contracts. And I did that to completely eliminate the about $5 to $6 million of margin that I had. So I went to literally zero margin, which was like amazing. It was beautiful. And of those option contracts, about 70% of them have been very profitable. And the other 30% have been kind of hit or miss. Like Coinbase has not been a good option contract. Just saying, okay? But that's okay. I mean, it's a piece of your portfolio. It's not always all going to do perfectly. But anyway, what I've been doing as things have hit highs, like Enphase, what I mentioned earlier in this live stream, when Enphase hit 190, I sold my option contract. When Google hit 2960, I sold my call option on it. And a lot of these options were up double. I mean, they're up hundreds of thousands of dollars each, and they started as like $100,000. So they're really good gains. And so the ones that have been very profitable, I've sold. And I've kept the cash for a dip. And that's kind of how I built up this war chest of somewhere around $5 million. I also sold puts and sold call contracts. Like I even sold calls against Tesla. I sold puts and calls against Tesla. And about 2 or 3 weeks ago, I started closing out my, like anytime I'd see nice profits in the sold contract positions, I take profits from those. And so basically I've just kind of been farming the market with option contracts, and it's been really great, especially because it's given me this opportunity to really buy this dip nicely. I haven't like gone all in on the dip. I still got a little bit left, but I've certainly put a large chunk of my cash, more than 70% of my cash, into the market on some of the dips that we've seen here. So and pricing right now, some of the things like Neo, $34. I think that's an opportunity. Let's look at some of these things here, especially with the overblownness of the Chinese fears that we have. So Disney up 1.1 at 175. It's not bad. Ubiquity at 300. It's also not a horrible price. 2% on Tesla, going back to 800 here. Tattooed Chef at 1850. Square at 229, folks. I mean, yesterday this was like 224. I had to buy some yesterday. This is not a horrible price. You know, relative to where it runs when it goes to like 170, or I'm sorry, 270, 280, you know, then it gets pricey again. Now, don't get me wrong. Square is an expensive company. There's a lot of growth built into Square. A lot of growth built into here. So keep that in mind. So then we've got SoFi Technologies. SoFi back up 2.5%. Shift Technologies up 4%. Smile Direct's doing nice here, 6.2%. Robinhood coming back a little bit. Robinhood really rubber banding to that $41. Very cool. Okay, let's see here. Plug Power, Pinterest. Okay. Trying to look for other ops here. Netflix, gosh, $6.21 on Netflix. My goodness. Macy's, $22. Matterport, $18.46. Still trying to build out more of a position here on Matterport. More Matterport than Lucid for me. I get asked about that, so that's why I figure I mention it. See other ops here. Faraday Futures, 8888. That's a cool price. Hey, Etsy's back over 202. Nice. Dave & Buster's, $40. Man, that was a deal when it fell to 32. I was eyeballing that hard, but I'm just like, nope, no recovery yet. It's all right. DocuSign, $295. Although I did do a sweet call contract on it. That helped me fix my option mistake on a firm. Camber, Coinbase, bookings. Yeah, Coinbase 235. Okay. All right. Let's go ahead and go to some news now. Affirm's just killing it today. Good job, Affirm. It is slowing down a little bit here. Let's see if that's the SPY or if it's just Affirm. Nope, the SPY's still kicking butt. Very nice. Very nice moves here. Market is strongly recovering now. Very good. Very, very, very good. Okay, what else do we have? Let's do an FT. Oh, yeah, how's Alibaba doing? Baba. Baba 149, or I'm sorry, 141. You know, this is tempting, the Chinese stocks, but again, like for me, Neo, that's my Chinese pick. And it's at $34, folks. Like, Neo's just in the toilet. And look at where it's been this year. It's been like, ugh. It's below. It's basically it's May pricing, folks. This is a steal. It is. Let's adjust your hairline. I know. I should do that. I was thinking about that too. Thank you for your reminder. But anyway, I'll deal with that later. I'm not going to do that right now because I can't. Okay. So where's the FT? All right, what we got over here? Facebook misled investors about its reach. Yeah, I'm interested to see how this whistleblower testimony goes today. We're going to keep an eye on that. That'll be fascinating. All right. Debt ceiling. Can the U.S. avert a disastrous default? Well, they're going to. I don't expect that to be a devastating issue right now because I think Congress is going to figure it out. Biden realizes, like, if the U.S. defaulted, he will not get reelected. That it would just be so bad. So he's going to just take what he can get at this point. My expectation. U.S. retailers fear supply shortages ahead of Halloween. Yeah, I don't know. We talk about supply shortages all the time. Okay. So, let's see here. Let's go to The Economist. All right. What do we got here? So here we go. To fossil fuel abundant instead. How do people and companies avoid paying taxes? Do we need like news? Okay. A lot of Facebook news. There's really not that terribly much news right now. Hold on a second. Let me search over here. Meantime, we'll look at the SPY. SPY. Oh, yeah. A little bit of that slowdown. We saw that in a firm. All right. So U.S. stocks rise as tech and energy stocks are in demand. Let me see what we have. Okay. Repo rates likely headed higher amid debt ceiling debate. Steepening yield curves means European banks can rally more. Inflation surprise hits emerging market policy laggers. Okay. Tuesday might be more of a as you were than a turnaround. Okay. U.S. stocks may earn a reprieve. For how long is the question? Ooh. U.S. equity futures are looking same. Okay, well, this was posted a little bit ago. But it would be foolhardy to read too much into the path of the green that we see. Both the S&P 500 and the NASDAQ have seen several declines greater than one standard deviation of a move in the past month. A reflection of how lofty current valuations are. The S&P 500 is trading at a forward PE of 21 plus, well above its historical average of 17x, and the NASDAQ composite, meanwhile, is trading at a lofty 31 versus a historical of 26. Yep, things are more expensive. Ooh, Enphase or Tesla? Well, for me, I have a big position in Tesla, and I'm still trying to build out my position in Enphase. So for me, it's going to be Enphase, especially since Enphase is also down. I mean, look at this. Okay, just for charting purposes. Hold on. What's the breaking news?
Before Senate panel. We'll take you there live as soon as she begins. In the meantime, good Tuesday morning. Welcome to another hour of Squawk on the Street.
Okay, so there was no breaking news. I saw the little icon and I'm like, what is it? What is it going to be? Nothing. But anyway, so take a look at the chart on Enphase here, right? So this is your Enphase chart. I like buying this sort of pain, which we had worse pain in May. This is when the company started buying back its own shares because things got so cheap. Tesla has been on a bit more of an uptrend here. So chart-wise, I'd much rather buy Enphase than Tesla right now. But Tesla's also proving it can get through these supply chain crises pretty well, or at least navigate them pretty darn well. It's doing very well. Firm's almost up a full 5%. Very nice. Matterport almost up 4. Shift Tech 3.8. Awesome. Awesome. Good. Okay. Let's see how this continues. Let's see what other news we have. There's got to be more news. It is, yeah. Tesla is sticking to a beautiful daily trend line. You are correct. Enphase is only $20 billion with a beta of 1. Yeah. So it trades with the market. And although I don't, is Tesla's beta or Enphase's beta 1? I don't know if I agree with that. Let me see. Beta. So historical beta for Enphase got to be a lot closer to like 1.5 or something. Historical beta for Enphase. Okay, raw beta is actually 2 compared to the S&P 500, and adjusted is a 1.7. Adjusted tries to look forward. Raw holds back. Now, if I go to, can I compare to the Dow? If I compare to the Dow Jones Industrial Average, that's to the S&P 500. If I look at the beta for the Dow, adjusted's 1.5, so a little lower. But yeah, no, definitely a higher beta. And of course, we are seeking alpha. Me, Kevin. In a recent CNBC YouTube video on Tesla solar struggles, they briefly mentioned Enphase, which is a good sign. Oh, thank you for that. I will check that out. CNBC YouTube Solar City Enphase. I'm going to bring that up. I think Enphase is an undiscovered gem. Yeah, I shouldn't say fully undiscovered. I mean, it's obviously been discovered to some degree, but anyway. So why is solar struggling? Come on, man. It's the chip crisis. The chip crisis. So what happened? Did outlet fly away? Does that mean it's going in the toilet? Oh gosh, yeah. It's certainly not flying up, which is usually what you'd think of if somebody says flying. It's fine. I've got options on it. So, and patience. Options and patience. You know, it's going to be fascinating to hear this testimony. The whistleblower before the Senate panel. That's crazy. I wonder how long. I mean, I can't imagine that her thing's going to be that long. I don't know. It might be worth watching. We'll see. All right, let's see here. Let's. Somebody says the 10-year Treasury is mooning. Let's hear if they're correct. What kind of zoom in is that? Well, I guess maybe they're setting up focus, but they probably shouldn't be putting that on TV. Oh dear. No, I know that Enphase has been a hot stock, but I think that they are relatively unappreciated for the growth potential that they have. I think their growth is undiscovered. Growth potential. But anyway, 1.52 on the 10-year Treasury. Yeah, a little bit of a bump up here. Woo. All right. Wall Street Journal. Let's take a look here. Oops. I don't know what WS is. The Wall Street. Oh my gosh, Kevin. There we go. Is there news on Microvision? Let's see. All right. I'm going to update the live here. So we'll continue. Facebook, whistleblower, and all right. Okay, cool. So we'll see what happens here with the or how this evolves with the Facebook whistleblower. Let me see if I can get quickly here situated on a different channel where I can get rid of all the distractions. Is this the Senate? Yeah, it is.
Narrative. There is a question, which I hope you will discuss, as to whether there is such a thing as a safe algorithm.
Ooh.
Facebook saw teens creating secret accounts.
All right, so we'll wait for her to start talking before we do anything else. But we will, in the meantime, just keep an eye on what's going on with stocks. We'll also see Facebook stock. Take a peek here. Facebook actually rebounding today a little bit, 1.2% to the upside. Let's go ahead and take a look at the Wall Street Journal as we wait for the whistleblower lawsuit to begin. Elizabeth Holmes' office romance now on display in court. Okay. Yeah. SEC Gensler aims to save investors money by squeezing Wall Street. Sweet. Stocks open higher after sell-off. Oil rally builds. Cotton prices surge to the highest level in a decade. My goodness. Cotton futures are trading at their highest point or highest price in a decade, with growing Chinese demand being met in part by rising U.S. exports to China. Okay. How much higher? Prices have risen 18% over the past 10 sessions. Oh, wow. Look at that jump just recently here. Okay. So we are still standing by for that whistleblower to begin testifying. We'll take a peek at that in just a moment. In the meantime, let's see what else do we have here. Empty buildings in China's provincial cities testify to Evergrand's default or debacle. Okay, let's see what we got here. Rows of residential towers, some 26 stories high, stand unfinished in this provincial city, about 350 miles west of Shanghai. Their plastic tarps flapping in the wind. Let's see here. These structures are monuments to the once grand ambitions of China Evergrand, among the world's most indebted property companies, and a case study into how China's dependence on real estate as an economic engine helped feed those ambitions. Well, thanks, Wall Street Journal. It's so weird how they have these ghost towns. Evergrande is in trouble in part because it developed properties aggressively in places such as Luan, where its debt-fueled building spree came as the city's population dwindled. It launched hundreds of projects across more than 200 Chinese cities. As it expanded, Evergrande racked up more than $300 billion in liabilities. In September, it was said it was facing unprecedented defaults. On Monday, Evergrande and its property management unit halted trading in Hong Kong, saying that the unit could be open to a takeover bid. So here's an individual who said they spent all of their family savings on the apartment, a 59-year-old farmer. In August, she said she bought the unit for $138,000 in a project called Jade Palace. 47 apartment buildings. Work halted months ago. She said she didn't know when or if it would restart. We really don't know what to do. Wow, so if you were over there, you would have known this Evergrande stuff coming a mile away. Evergrande has completed many projects in Luan over the past decade and turned homes over to buyers, as an Evergrande spokesman said the company would do everything possible to ensure completion of its projects. This is really going to rely on local cities and other developers. Let's see. For local leaders, developers represent a revenue stream. With limited power to tax, Chinese cities get roughly a third of their revenue from selling land to property developers like Evergrande. Wow. Cities annex farmland to sell to developers. So basically they take farmland and then sell it to developers. Farmers often get to buy apartments at a discount, in exchange for losing their farmland. Real estate has become some of the city's biggest economic driver, or some cities' biggest economic drivers. The property construction in smaller cities are ahead of demand for the last 5 years, leaving the market increasingly dependent on speculators and investors to buy properties. About 21% of the homes in urban China were already vacant in 2017, which equates to 65 million units. Wow, 21% vacant? As China cracks down, new home construction slowed. Local government's land sale revenues fell by 17.5% in August. Sharp deceleration in the Chinese property market could exacerbate and amplify downward pressure on the job market and China's overall economy. But some estimates by some estimates, real estate-related activity now accounts for nearly 1/3 of China's economy. Wow, it's going to be a big anchor. Most economists believe the Chinese government will restructure Evergrande. Still, economists say there will be lost economic activity if Beijing continues to drain away excess debt and root out speculation in real estate. Well, yeah, no kidding. Remember that U-turn they had in debt policies last August. We've got 4 unfinished projects in Luan that the Wall Street Journal visited in late September appear to have stopped construction. Nearby store owners described the loss of business after construction workers stopped showing up. In one Evergrande office, staff took naps or huddled over smartphones. At least 23 lawsuits involving commercial bills, a form of IOU among Chinese businesses, have been filed against Evergrande subsidiaries. Wow, the company's just straight up going bankrupt. Dragon Head-like, so a little bit more history on the company. Wow, it's incredible. Buyers often queued up for hours or went through lotteries to angle for apartments. This was the heyday back in 2011. And between 19 and the end of 2021, Evergrande was Luan's biggest developer. Evergrande at the time. All right, let's see here. Anything else? Cash crunch, and then we get to the cash crunch. Evergrande offered a 35% discount last year, borrowed from friends and family to buy the new home, which was supposed to be ready in 2013, 3-year development time frame. Wow. She says she believes the government or perhaps state-owned enterprises will step in to finish the project. It isn't clear where the money that developers like Evergrande collected from home buyers through pre-sales have been going. In many cases, the journal has reported developers use the cash as general funding for operations. Yikes. That's it's basically like the Ponzi scheme of real estate. The Evergrande theme park was partially operating on a late September visit with small-scale attractions and a handful of restaurants open. Incomplete apartments towered over the park. The carousel was closed. And a little theme park, I guess. Or not theme park, carnival or some sort. Anyway, wow, the Evergrande crisis is crazy. Crazy, 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 crazy. All right, let's go on over to the testimony. It looks like we're just now getting underway. Let's see here.
Senator Markey and I have introduced the KIDS Act, which would ban addictive tactics that Facebook uses to exploit children. Parents deserve better tools to protect their children. I'm also a firm supporter of reforming Section 230. We should consider narrowing this sweeping immunity when platforms' algorithms amplify illegal conduct. You've commented on this in your testimony, and perhaps you'll expand on it. We have also heard compelling recommendations about
I'm really interested to see her testimony more so than the others. So I'm going to just take a peek at the stock market here, and then we'll circle back to this testimony once it actually begins here. So let's take a look at the S&P 500 and just see how we're moving in the stock market here. It appears the answer is straight up, is what we're seeing right now in the stock market, which is good because we had a pretty big sell-off yesterday. So it was a nice buy the dip opportunity. Like we said, there's so much money in the system. A lot of buy the dipping right now. Look at that. Affirm Holdings up 5.16%. Lemonade up 4.74%. Microvision up 6.93%. Oh, that's right. Somebody had asked me to look at Microvision just to see if there was any news before we get this testimony here. Microvision leases office space. Looks like the answer is no, since that was from September. No particular news on Microvision that I can see here. All right, looking at the downside, it's really Lordstown Motors, Roblox. These folks kind of rotating to the down here. Dutch Bros 225 to the downside. GameStop down about 0.79%. Does that also mean that AMC is down? Probably. No, AMC is actually heading back to the 3742 trend line, or not trend line, resistance line here. We bounced off that a little bit earlier today. Still waiting for the whistleblower to actually begin her testimony. In the meantime, we have Tesla up 1.33%. Went as high as about $797, but did pop off. Looks like you're almost creating this resistance at about $800 for Tesla here. Didn't have enough energy to really break through that on the deliveries beat, which I mean in theory is a form of an earnings beat, but then that would take away the whole purpose of a company operating efficiently. So we can't really say that. Redfin up 3.32, SoFi Technologies up 3-ish, Shift 3-ish. Wynn Resorts, win. Back to 85. Enphase, wherever the darn thing went, sitting somewhere over here around that 2 to 3% range up. Really, all eyes are going to be on Facebook today with this testimony that we're waiting to begin here. Facebook still up today, though. There we go. Let's listen again.
As they invade the privacy, not only of adults, but of children. And look at the ways that they are in violation of.
All right, so we've got a lot of opening statements here from other senators, so we're going to wait again for the whistleblower's actual testimony to begin, and then we'll end up going to Q&A with that whistleblower. So it'll be interesting to see how it expands. All right, what else? Let's see here. All right, well, we may as well listen while I look for something else.
It will be this Congress and this subcommittee that is going to lead the way to online privacy, data security, Section 230 reforms. And of course, Senator Klobuchar always wants to talk about antitrust. And I have to give a nod. Senator Markey is down there. When we were in the House, we were probably two of the only ones who were talking about the need to have a federal privacy standard. Now, as the chairman mentioned, last week we heard from Ms. Davis, who heads global safety for Facebook. And it was surprising to us that what she tried to do was to minimize the information that was in these documents, to minimize the research and to minimize the knowledge that Facebook had. At one point, I even reminded her the research was not third-party research. The research was there, Facebook's internal research. So,
all right, we're going to go ahead and just sort of explore just the market here for another minute or so while we wait for testimony to actually begin. Microvision still pushing here. Look at that. It's so Smile Direct really popping off that lower bounce here. Let's go ahead and just look TA wise here at Smile Direct. We did get a low of about 463, did get to about 508 here in the recent dip. But boy, oh boy, Smile Direct has certainly been a little bit of one that has been trending to the downside here. Microvision has been another downtrender. You can really see Microvision's chart looks eerily similar, by the way, to NEO as we're waiting for this testimony to begin. Very, very similar. NVIDIA, how's NVIDIA doing? NVIDIA is still rotating to the downside. It is up 2.4% today. We've definitely seen a rotation here over the last about a month. It's probably just that September technologies dip. Seen a lot of this downtrend here as well on Trade Desk and Enphase. Okay, Wayfair. Wow, Wayfair's at 244. Wow, Wayfair really sold down. This is Ethereum. There's Wayfair. There we go. Here's Wayfair. Yeah, look at Wayfair. It's really dancing along a bottom right now if you think about it. I mean, look at this particular shelf. If you drew, this is a double touch right here. Here's a double touch. This is almost a rough triple is what I'll call this. Let's go ahead and draw a line here. Again, waiting for that testimony to actually begin. Right now, we're just seeing senators do their opening remarks. Yeah, look at that for Wayfair. In my opinion, that's not a bad entry. I wonder if we could sell some puts on Wayfair again. Let's grab some 45-day sell puts. 10 would sign me up to 100 at 2. That's too much. Nah, I don't want to do that much. Do I want to do that much? That's actually not bad. That's actually really good. That's almost 10%. Actually, that's exactly what I want to do. Dang it. I can't. I have to go to Robinhood. That's a good one. IMO. Fine then. All right. Almost going to start this discussion here, or this testimony. Waiting for that testimony to begin. All right. Sell put 10 review. All right. Boom. Let's go. That's a good one. 45-day sell put 10% on Wayfair when it's at the bottom like that. That's nice. I'm going to watch this one because I might do more of that. That's cool. Anyway, come on. When is our testimony? When are these opening statements going to stop? It's boring.
Told us that they recently had deleted 600,000 accounts from children under age 13. So how do you get that many underage accounts if you aren't turning a blind eye to them in the first place? And then in order to try to clean it up, you go to delete it, and then you say, oh, by the way, we just in the last month deleted 600,000 underage accounts. And speaking of turning a blind eye, Facebook turns a blind eye to user privacy. News broke yesterday that the private data of over 1.5 billion, that's right, 1.5 billion Facebook users is being sold on a hacking forum. That's its biggest data breach to date. Examples like this underscore my strong concerns about Facebook collecting the data of kids and teens and what they are doing with it. Facebook also turns a blind eye toward blatant human exploitation taking place on its platform, trafficking, forced labor, cartels, the worst possible things one can imagine. Big tech companies have gotten away with abusing consumers for too long. It is clear that Facebook prioritizes profit over the well-being of children and all users. So as a mother and a grandmother, this is an issue that is of particular concern to me. So we thank you for being here today, Ms. Haugen, and we look forward to getting to the truth about what Facebook is doing with users' data and how they are abusing their privacy and how they show a lack of respect for the individuals that are on their network. We look forward to the testimony. Thank you, Mr. Chairman.
Thanks, Senator Black. Thank you, Senator Blackburn. I don't know whether the ranking member would like to make.
If you don't mind, thank you, Chairman Blumenthal, and I will just take a moment or two. And I do appreciate being able to speak as ranking member of the full committee. This Ms. Haugen, this is a subcommittee hearing. You see some vacant seats. There's pretty good attendance for a subcommittee. There are also a lot of things going on, so people will be coming and going. But I'm willing to predict that this will have almost 100% attendance by members of the subcommittee because of the importance of this subject matter. So thanks for coming forward to share concerns about Facebook's business practices, particularly with respect to children and teens. And of course, that is the main topic of it's the title of our hearing today, Protecting Kids Online. The recent revelations about Facebook's mental health effects on children and its plan to target younger audiences are indeed disturbing. And I think you're going to see a lot of bipartisan concern about this today and in future hearings. They show how urgent it is for Congress to act against powerful tech.
Okay, I'm really looking forward to what the lady's going to say, but I have to say I'm a little exhausted listening to the other folks. So we're not only going to listen to the other folks, we're also going to look at other things. Remember, folks, when you sell puts, just worth noting, when you sell puts like we just did, you are in some sense making a bet that volatility is going to go down. And if you expect volatility to go up, you might not want to make that kind of trade. Over. Okay. So anyway, I guess we'll keep listening.
Knowledge on behalf of the leadership of these big tech companies that is true. Ms. Hogan, I hope you will have a chance to talk about your work experience at Facebook and perhaps compare it to other social media companies. I also look forward to hearing your thoughts on how this committee and how this Congress can ensure greater accountability and transparency, especially with regard to children. So thank you, Mr.
All right,
Chairman.
And no more
thank you,
senators,
Ms. Hogan,
please.
for being here today.
No more. Let her talk.
Thanks, Senator
Let
Wicker.
her talk.
Our witness this morning is Frances Haugen. She was the lead product manager on Facebook's civic misinformation team. She holds a degree in electrical and computer engineering from Olin College and an MBA from Harvard. She made the courageous decision, as all of us here and many others around the world know, to leave Facebook and reveal the terrible truths about the company she learned during her tenure there. And I think we are all in agreement here in expressing our gratitude and our admiration for your bravery in coming forward. Thank you, Ms. Haugen. Please proceed.
Here we go.
Good afternoon, Chairman Blumenthal, Ranking Member Blackburn, and members of the subcommittee. Thank you for the opportunity to appear before you. My name is Frances Haugen. I used to work at Facebook. I joined Facebook because I think Facebook has the potential to bring out the best in us. But I'm here today because I believe Facebook's products harm children, stoke division, and weaken our democracy. The company's leadership knows how to make Facebook and Instagram safer, but won't make the necessary changes because they have put their astronomical profits before people. Congressional action is needed. They won't solve this crisis without your help. Yesterday, we saw Facebook get taken off the internet. I don't know why it went down, but I know that for more than 5 hours, Facebook wasn't used to deepen divides, destabilize democracies, and make young girls and women feel bad about their bodies. It also means that millions of small businesses weren't able to reach potential customers, and countless photos of new babies weren't joyously celebrated by family and friends around the world. I believe in the potential of Facebook. We can have social media we enjoy that connects us without tearing apart our democracy, putting our children in danger, and sowing ethnic violence around the world. We can do better. I have worked as a product manager at large tech companies since 2006, including Google, Pinterest, Yelp, and Facebook. My job has largely focused on algorithmic products like Google Plus Search and recommendation systems like the one that powers the Facebook newsfeed. Having worked on 4 different types of social networks, I understand how complex and nuanced these problems are. However, the choices being made inside of Facebook are disastrous for our children, for our public safety, for our privacy, and for our democracy. And that is why we must demand Facebook make changes. During my time at Facebook, first working as the lead product manager for civic misinformation, and later on counter-espionage, I saw Facebook repeatedly encounter conflicts between its own profits and our safety. Facebook consistently resolved these conflicts in favor of its own profits. The result has been more division, more harm, more lies, more threats, and more combat. In some cases, this dangerous online talk has led to actual violence that harms and even kills people. This is not simply a matter of certain social media users being angry or unstable, or about one side being radicalized against the other. It is about Facebook choosing to grow at all costs, becoming an almost $1 trillion company by buying its profits with our safety. During my time at Facebook, I came to realize a devastating truth. Almost no one outside of Facebook knows what happens inside of Facebook. The company intentionally hides vital information from the public, from the US government, and from governments around the world. The documents I have provided to Congress prove that Facebook has repeatedly misled the public about what its own research reveals about the safety of children, the efficacy of its artificial intelligence systems, and its role in spreading divisive and extreme messages. I came forward because I believe that every human being deserves the dignity of the truth. The severity of this crisis demands that we break out of our previous regulatory frames. Facebook wants to trick you into thinking that privacy protections or changes to Section 230 alone will be sufficient. While important, these will not get to the core of the issue, which is that no one truly understands the destructive choices made by Facebook except Facebook. We can afford nothing less than full transparency. As long as Facebook is operating in the shadows, hiding its research from public scrutiny, it is unaccountable. Until the incentives change, Facebook will not change. Left alone, Facebook will continue to make choices that go against the common good, our common good. When we realized big tobacco was hiding the harms it caused, the government took action. When we figured out cars were safer with seatbelts, the government took action. And when our government learned that opioids were taking lives, the government took action. I implore you to do the same here. Today, Facebook shapes our perception of the world by choosing the information we see. Even those who don't use Facebook are impacted by the majority who do. A company with such frightening influence over so many people, over their deepest thoughts, feelings, and behavior, needs real oversight. But Facebook's closed design means it has no real oversight. Only Facebook knows how it personalizes your feed for you. At other large tech companies like Google, any independent researcher can download from the internet the company's search results and write papers about what they find. And they do. But Facebook hides behind walls that keeps researchers and regulators from understanding the true dynamics of their system. Facebook will tell you privacy means they can't give you data. This is not true. When tobacco companies claimed that filtered cigarettes were safer for consumers, scientists could independently invalidate these marketing messages and confirm that, in fact, they posed a greater threat to human health. The public cannot do the same with Facebook. We are given no other option than to take their marketing messages on blind faith. Not only does the company hide most of its own data, my disclosure has proved that when Facebook is directly asked questions as important as, how do you impact the health and safety of our children? They mislead and they choose to mislead and misdirect. Facebook has not earned our blind faith. This inability to see into Facebook's actual systems and regulating cars by only watching them drive down the highway. Today, no regulator has a menu of solutions for how to fix Facebook because Facebook didn't want them to know enough about what's causing the problems. Otherwise, there wouldn't have been need for a whistleblower. How is the public supposed to assess if Facebook is resolving conflicts of interest in a way that is aligned with the public good if the public has no visibility into how Facebook operates? This must change. Facebook wants you to believe that the problems we're talking about are unsolvable. They want you to believe in false choices. They want you to believe that you must choose between a Facebook full of divisive and extreme content or losing one of the most important values our country was founded upon, free speech. That you must choose between public oversight of Facebook's choices and your personal privacy. That to be able to share fun photos of your kids with old friends, you must also be inundated with anger-driven virality. They want you to believe that this is just part of the deal. I am here today to tell you that's not true. These problems are solvable. A safer, free speech respecting, more enjoyable social media is possible. But there's one thing that I hope everyone takes away from these disclosures. It is that Facebook can change, but is clearly not going to do so on its own. My fear is that without action, divisive and extremist behaviors we see today are only the beginning. What we saw in Myanmar and are now seeing in Ethiopia are only the opening chapters of a story so terrifying, no one wants to read the end of it. Congress can change the rules that Facebook plays by and stop the many harms it is now causing. We now know the truth about Facebook's destructive impact. I really appreciate the seriousness which the members of Congress and the Securities and Exchange Commission are approaching these issues. I came forward at great personal risk because I believe we still have time to act. But we must act now. I'm asking you, our elected representatives, to act. Thank you.
Thank you, Ms. Haugen. Thank you for taking that personal risk, and we will do anything and everything to protect and stop any retaliation against you and any legal action that the company may bring to bear or anyone else. And we've made that, I think, very clear in the course of these proceedings. I want to ask you about this idea of disclosure. You've talked about looking, in effect, at a car going down the road, and we're going to have 5-minute rounds of questions, maybe a second round if you're willing to do it. We're here today to look under the hood, and that's what we need to do more. In August, Senator Blackburn and I wrote to Mark Zuckerberg, and we asked him pretty straightforward questions about how the company works and safeguards children and teens on Instagram. Facebook dodged, ducked, sidetracked, in effect misled us. So I'm going to ask you a few straightforward questions to break down some of what you have said, and if you can answer them yes or no, that would be great. Has Facebook's research, its own research, ever found that its platforms can have a negative effect on children and teens' mental health or well-being?
Many of Facebook's internal research reports indicate that Facebook has a serious negative harm on a significant portion of teenagers and younger and children.
And has Facebook ever offered features that it knew had a negative effect on children's and teens' mental health?
Facebook knows that its amplification algorithms, things like engagement-based ranking on Instagram, can lead children from very innocuous topics like healthy recipes. I think all of us could eat a little more healthy, all the way from just something innocent like healthy recipes to anorexia promoting content over a very short period of time.
And has Facebook ever found, again, in its research, that kids show sign of addiction on Instagram?
Facebook has studied a pattern that they call problematic use, what we might more commonly call addiction. It has a very high bar for what it believes it is. It says you self-identify that you don't have control over your usage and that it is materially harming your health, your schoolwork, or your physical health. 5 to 6% of 14-year-olds have the self-awareness to admit both those questions. It is likely that far more than 5 to 6% of 14-year-olds are addicted to Instagram.
Last Thursday, my colleagues and I asked Ms. Davis, who was representing Facebook, about how the decision would be made whether to pause permanently Instagram for kids. And she said, quote, "There's no one person who makes a decision like that. We think about that collaboratively." It's as though she couldn't mention Mark Zuckerberg's name. Isn't he the one who will be making this decision from your experience in the company?
Mark holds a very unique role in the tech industry in that he holds over 55% of all the voting shares for Facebook. There are no similarly powerful companies that are as unilaterally controlled. And in the end, the buck stops with Mark. There's no one currently holding Mark accountable but himself.
And Mark Zuckerberg, in effect, is the algorithm designer in chief, correct?
I received an MBA from Harvard, and they emphasized to us that we are responsible for the organizations that we build. Mark has built an organization that is very metrics driven. It is intended to be flat. There is no unilateral responsibility. The metrics make the decision. Unfortunately, that itself is a decision. And in the end, if he is the CEO and the chairman of Facebook, he is responsible for those decisions.
The buck stops with him.
The buck stops with him.
And speaking of the buck stopping, you have said that Facebook should declare moral bankruptcy. I agree.
Yeah.
I think its actions and its failure to acknowledge its responsibility indicate moral bankruptcy.
There is a cycle occurring inside the company where Facebook has struggled for a long time to recruit and retain the number of employees it needs to tackle the large scope of projects that it has chosen to take on. Facebook is stuck in a cycle where it struggles to hire. That causes it to understaff projects, which causes scandals, which then makes it harder to hire. Part of why Facebook needs to come out and say, we did something wrong, we made some choices that we regret, is the only way we can move forward and heal Facebook is we first have to admit the truth. Like the way we'll have reconciliation and we can move forward is by first being honest and declaring moral bankruptcy.
Being honest and acknowledging that Facebook has caused and aggravated a lot of pain simply to make more money. And it has profited off spreading disinformation and misinformation and sowing hate. Facebook's answers to Facebook's destructive impact always seems to be more Facebook. We need more Facebook, which means more pain and more money for Facebook. Would you agree?
I don't think at any point Facebook set out to make a destructive platform. I think it is a challenge of that Facebook has set up an organization where the parts of the organization responsible for growing and expanding the organization are separate and not regularly cross-pollinated with the parts of the company that focus on the harms that the company is causing. And as a result, regularly, integrity actions, projects that were hard fought by the teams trying to keep us safe, are undone by new growth projects that counteract those same remedies. So I do think it's a thing of there are organizational problems that need oversight, and Facebook needs help in order to move forward to a more healthy place.
And whether it's teens bullied into suicidal thoughts or the genocide of ethnic minorities in Myanmar, or fanning the flames of division within our own country or in Europe, they are ultimately responsible for the immorality of the pain that's caused.
Facebook needs to take responsibility for the consequences of its choices. It needs to be willing to accept small trade-offs on profit. And I think just that act of being able to admit that it's a mixed bag is important. And I think that what we saw from Antigone last week is an example of the kind of behavior we need to support Facebook in growing out of, which is instead of just focusing on all the good they do, admit they have responsibilities to also remedy the harm.
But Mark Zuckerberg's new policy is no apologies, no admissions, no acknowledgement, nothing to see here. We're going to deflect it and go sailing. I turn to the ranking member.
Thank you, Mr. Chairman. Thank you for your testimony. I want to stay with Ms. Davis and some of her comments because I had asked her last week about the underage users. And she had made the comment, I'm going to quote from her testimony, if we find an account of someone who's under 13, we remove them. In the last 3 months, we removed 600,000 accounts of under 13-year-olds, end quote. And I have to tell you, it seems to me that there's a problem if you have 600,000 accounts from children who ought not to be there in the first place. So what did Mark Zuckerberg know about Facebook's plans to bring kids on as new users and advertise to them?
There are reports within Facebook that show cohort analyses where they examine at what ages do people join Facebook and Instagram. And based on those cohort analyses, so Facebook likes to say children lie about their ages to get onto the platform.
Mhm.
The reality is enough kids tell the truth that you can work backwards to figure out what are approximately the real ages of anyone who's on the platform. When Facebook does cohort analyses and looks back retrospectively, it discovers things like, up to 10 to 15% of even 10-year-olds in a given cohort.
Okay, so this is why Adam Mosseri, who's the CEO of Instagram, would have replied to Jojo Siwa when she said to him, "Oh, I've been on Instagram since I was 8." He said he didn't want to know that.
Yeah.
So it would be for this reason, correct?
A pattern of behavior that I saw at Facebook was that often problems were so understaffed that there was kind of an implicit discouragement from having better detection systems. So for
Okay.
example, I worked, my last team at Facebook was on the counter espionage team within the threat intelligence org. And at any given time, our team could only handle a third of the cases that we knew about. We
Okay.
knew that if we built even a basic detector, we would likely have many more cases.
Okay, then let me
Similarly,
ask you.
sure.
Yeah, let me ask you this. So you look at the way that they have the data, but they're choosing to keep that data and advertise from it, right?
Mhm.
Sell it to third parties.
Mhm.
So what does Facebook do? You've got these 600,000 accounts that ought not to be on there.
Mhm. Probably
And-
more. Mhm.
And, right.
Yeah.
But then you delete those accounts. But what happens to that data? Does Facebook keep that data? Do they keep it until those children go to age 13? Since, as you're saying, they can work backward and figure out the true age of a user. So what do they do with it? Do they delete it? Do they store it? Do they keep it? How do they process that?
My understanding of Facebook's data retention policies, and I want to be really clear, I didn't work directly on that, is that when they delete an account, they delete all the data within, I believe, 90
Okay.
days in compliance with GDPR. With regard to children underage on the platform, Facebook could do substantially more to detect more of those children, and they should have to publish for Congress those processes because there are lots of subtleties in those things, and they could be much more effective than probably what they're doing today.
Got it. Now, staying with this underage children, since this hearing is all about kids and about online privacy, I want you to tell me how Facebook is able to do market research on these children that are under age 13, because Mrs. Davis was really, she didn't deny this last week. So how are they doing this? Do they bring kids into focus groups with their parents? How do they get that permission? She said they got permission from parents. Is there a permission slip or a form that gets signed? And then how do they know which kids to target?
There's a bunch to unpack there. We'll start with maybe how did they recruit children for focus groups or recruit teenagers? Most tech companies have systems where they can analyze the data that is on their servers. So most of the focus groups I read or that I saw analysis of were around Messenger Kids, which has children on it. And those focus groups appear to be children interacting in person. Often large tech companies use either sourcing agencies that will go and identify people who meet certain demographic criteria, or they will reach out directly based on data on the platform. So for example, on the case of Messenger Kids, maybe you would want to study a child that was an active user and one that was a less active user. You might reach out to some that came from each population.
And so these are children that are under age 13.
Yeah.
And they know it.
For some of these studies. And I assume they get permission, but I don't work on that.
Okay. Well, we're still waiting to get a copy of
Yeah.
that parental consent form that would involve children. My time has expired, Mr. Chairman. I'll save my other questions for our second round if we're able to get those. Thank you.
Great. Thank you, Senator Blackburn. Senator Klobuchar.
Thank you very much, Mr. Chairman. Thank you so much, Ms. Haugen, for shedding a light on how Facebook time and time again has put profit over people. When their own research found that more than 13% of teen girls say that Instagram made their thoughts of suicide worse, what did they do? They proposed Instagram for Kids, which has now been put on pause because of public pressure. When they found out that their algorithms are fostering polarization, misinformation, and hate.
This is IronNet, by the way, taking off a little bit on some new volume.
Contact to remain unchecked on their platform, including lead up to the January 6th insurrection. What did they do? They now, as we know, Mark Zuckerberg's going sailing and saying no apologies. I think the time has come for action, and I think you are the catalyst for that action. You have said privacy legislation is not enough. I completely agree with you, but I think you know we have not done anything to update our privacy laws in this country, our federal privacy laws. Nothing, zilch, in any major way. Why? Because there are lobbyists around every single corner of this building that have been hired by the tech industry.
Mm-hmm.
We have done nothing when it comes to making the algorithms more transparent, allowing for the university research that you referred to. Why? Because Facebook and the other tech companies are throwing a bunch of money around this town and people are listening to them. We have done nothing significantly past, although we are on a bipartisan basis working in the antitrust subcommittee to get something done on consolidation, which you understand allows the dominant platforms to control all this, like the bullies in the neighborhood, buy out the companies that maybe could have competed with them and added the bells and whistles. So the time for action is now. So I'll start with something that I asked Facebook's head of safety when she testified before us last week. I asked her how they estimate the lifetime value of a user for kids who start using their products before they turn 13. She evaded the question and said, that's not the way we think about it. Is that right? Or is it your experience that Facebook estimates and puts a value on how much money they get from users in general? I'll get to kids in a second. Is that a motivating force for them?
Based on what I saw in terms of allocation of integrity spending, so one of the things disclosed in the Wall Street Journal was that I believe it's like 87% of all the misinformation spending is spent on English, but only about like 9% of the users are English speakers. It seems that Facebook invests more in users who make them more money, even though the danger may not be evenly distributed based on profitability.
Does it make sense that having a younger person get hooked on social media at a young age makes them more profitable over the long term as they have a life ahead of them?
Facebook's internal documents talk about the importance of getting younger users, for example, tweens, onto Instagram, like Instagram Kids, because they need to have, they know that children bring their parents online and things like that. And so they understand the value of younger users for the long-term success of Facebook.
Facebook reported advertising revenue to be $51.58 per user last quarter in the US and Canada. When I asked Ms. Davis how much of that came from Instagram users under 18, she wouldn't say. Do you think that teens are profitable for their company?
I would assume so, based on advertising for things like television. You get substantially higher advertising rates for customers who don't yet have preferences or habits. And so I'm sure they are some of the more profitable users on Facebook, but I do not work directly on that.
Another major issue that's come out of this, eating disorders. Studies have found that eating disorders actually have the highest mortality rate of any mental illness for women. And I led a bill on this with Senators Capito and Baldwin that we passed into law. And I'm concerned that this algorithms that they have pushes outrageous content, promoting anorexia and the like. I know it's personal to you. Do you think that their algorithms push some of this content to young girls?
Facebook knows that the engagement-based ranking, the way that they pick the content in Instagram for young users, for all users, amplifies preferences. And they have done something called a proactive incident response, where they take things that they've heard. For example, like, can you be led by the algorithms to anorexia content? And they have literally recreated that experiment themselves and confirmed, yes, this happens to people. So Facebook knows that they are leading young users to anorexia content.
Do you think they are?
That's crazy that they can reverse engineer that, essentially. Like, oh yeah, we're going to turn you into an anorexic person. That's crazy.
Successful and very effective growth division, where they take little tiny tweaks and they constantly are trying to optimize it to grow. Those kinds of stickiness could be construed as things that facilitate addiction.
Right. Last thing I'll ask is, we've seen this same kind of content in the political world. You brought up other countries and what's been happening there. On 60 Minutes, you said that Facebook implemented safeguards to reduce misinformation ahead of the 2020 election, but turned off those safeguards right after the election. And you know that the insurrection occurred January 6th. Do you think that Facebook turned off the safeguards because they were costing the company money, because it was reducing profits?
Facebook has been emphasizing a false choice. They've said the safeguards that were in place before the election implicated free speech. The choices that were happening on the platform were really about how reactive and twitchy was the platform, right? Like, how viral was the platform? And Facebook changed those safety defaults in the run-up to the election because they knew they were dangerous. And because they wanted that growth back, they wanted the acceleration of the platform back after the election, they returned to their original defaults. And the fact that they had to break the glass on January 6th and turn them back on, I think that's deeply problematic.
Agree. Thank you very much for your bravery in coming forward.
Senator Thune.
Thank you, Mr. Chair and Ranking Member Blackburn. I've been arguing for some time that it is time for Congress to act. And I think the question is always, what is the correct way to do it, the right way to do it, consistent with our First Amendment right to free speech?
Totally.
This committee doesn't have jurisdiction over the antitrust issue. That's the Judiciary Committee. And I'm not averse to looking at the monopolistic nature of Facebook, honestly. I think that's a real issue that needs to be examined and perhaps addressed as well. But at least under this committee's jurisdiction, there are a couple of things I think we can do. And I have a piece of legislation, and Senators Blackburn and Blumenthal are both co-sponsors, called the Filter Bubble Transparency Act. And essentially what it would do is give users the options to engage with social media platforms without being manipulated by these secret formulas that essentially dictate the content that you see when you open up an app or log on to a website. We also, I think, need to hold big tech accountable by reforming Section 230. And one of the best opportunities, I think, to do that, at least in a bipartisan way, is the Platform Accountability and Consumer Transparency, or the PACT Act. And that's legislation that I've co-sponsored with Senator Schatz, which, in addition to stripping Section 230 protections for content that a court determines to be illegal, the PACT Act would also increase transparency and due process for users around the content moderation process. And importantly, in the context we're talking about today with this hearing, with a major big tech whistleblower, the PACT Act would explore the viability of a federal program for big tech employees to blow the whistle on wrongdoing inside the companies where they work. In my view, we should encourage employees in the tech sector like you to speak up about questionable practices of big tech companies, so we can, among other things, ensure that Americans are fully aware of how social media platforms are using artificial intelligence and opaque algorithms to keep them hooked on the platform. So let me, Ms. Haugen, just ask you, we've learned from the information that you provided that Facebook conducts what's called engagement-based ranking, which you've described as very dangerous. Could you talk more about why engagement-based ranking is dangerous, and do you think Congress should seek to pass legislation like the Filter Bubble Transparency Act that would give users the ability to avoid engagement-based ranking altogether?
Facebook is going to say, you don't want to give up engagement-based ranking. You're not going to like Facebook as much if we're not picking out the content for you. That's just not true. There are a lot of Facebook likes to present things as false choices. Like you have to choose between having lots of spam. Like let's say, imagine we ordered our feeds by time, like on iMessage or on, there are other forms of social media that are chronologically based. They're going to say, you're going to get spammed, like you're not going to enjoy your feed. The reality is that those experiences have a lot of permutations. There are ways that we can make those experiences where computers don't regulate what we see. We together socially regulate what we see. But they don't want us to have that conversation because Facebook knows that when they pick out the content that we focus on using computers, we spend more time on their platform, they make more money. The dangers of engagement-based ranking are that Facebook knows that content that elicits an extreme reaction from you is more likely to get a click, a comment, or reshare. And it's interesting because those clicks and comments and reshares aren't even necessarily for your benefit. It's because they know that other people will produce more content if they get the likes and comments and reshares. They prioritize content in your feed so that you will give little hits of dopamine to your friends so they will create more content. And they have run experiments on people, producer-side experiments, where they have confirmed this.
So
Yeah.
you and your part of the information you provide.
It's the same thing on YouTube. It's kind of like why there's so many like market crash channels where all they talk about is market crash because that's shareable.
Strengthening bonds between family and friends on the platform. The algorithm instead rewarded more outrage and sensationalism. And I think Facebook would say that its algorithms are used to connect individuals with other friends and family that are largely positive. Do you believe that Facebook's algorithms make its platform a better place for most users, and should consumers have the option to use Facebook and Instagram without being manipulated by algorithms designed to keep them engaged on that platform?
I strongly believe, like I've spent most of my career working on systems like engagement-based ranking. Like when I come to you and say these things, I'm basically damning 10 years of my own work, right? Engagement-based ranking, Facebook says we can do it safely because we have AI. You know, the artificial intelligence will find the bad content that we know our engagement-based ranking is promoting. They've written blog posts on how they know engagement-based ranking is dangerous, but the AI will save us. Facebook's own research says they cannot adequately identify dangerous content. And as a result, those dangerous algorithms that they admit are picking up the extreme sentiments, the division. They can't protect us from the harms that they know exist in their own system. And so I don't think it's just a question of saying, should people have the option of choosing to not be manipulated by their algorithms? I think if we had appropriate oversight, or if we reformed 230 to make Facebook responsible for the consequences of their intentional ranking decisions, I think they would get rid of engagement-based ranking, because it is causing teenagers to be exposed to more anorexia content. It is pulling families apart. And in places like Ethiopia, it's literally fanning ethnic violence. I encourage reform of these platforms, not picking and choosing individual ideas, but instead making the platforms themselves safer, less twitchy, less reactive, less viral, because that's how we scalably solve these problems.
Thank you. Ms. Chair, I would simply say let's get to work. So we got some things we can do here. Thanks.
I agree. Thank you. Senator Shaw.
Thank you, Mr. Chairman, Ranking Member. Thank you for your courage in coming forward. Was there a particular moment when you came to the conclusion that reform from the inside was impossible and that you decided to be a whistleblower?
There was a long series of moments where I became aware that Facebook, when faced with conflicts of interest between its own profits and the common good, public safety, that Facebook consistently chose to prioritize its profits. I think the moment at which I realized we needed to get help from the outside, that the only way these problems would be solved is by solving them together, not solving them alone, was when civic integrity was dissolved following the 2020 election. It really felt like a betrayal of the promises that Facebook had made to people who had sacrificed a great deal to keep the election safe by basically dissolving our community and integrating it in just other parts of the company.
And when I know their response is that they've sort of distributed the duties.
Yeah.
That's an excuse, right?
I cannot see into the hearts of other men, and I don't know what.
Well, let me say it this way: it won't work, right?
And I can tell you that when I left the company, so the people who I worked with were disproportionately, maybe 75% of my pod of 7 people. Those are product managers, program managers. Most of them had come from civic integrity. All of us left the inauthentic behavior pod, either for other parts of the company or the company entirely over the same 6-week period of time. So 6 months after the reorganization, we had clearly lost faith that those changes were coming.
You said in your opening statement that they know how to make Facebook and Instagram safer. So thought experiment. You are now the chief executive officer and chairman of the company. What changes would you immediately institute?
I would immediately establish a policy of how to share information and research from inside the company with appropriate oversight bodies like Congress. I would give proposed legislation to Congress saying, here's what an effective oversight agency would look like. I would actively engage with academics to make sure that people who are confirming are Facebook's marketing message is true have the information they need to confirm these things. And I would immediately implement the, quote, soft interventions that were identified to protect the 2020 election. So that's things like requiring someone to click on a link before resharing it, because other companies like Twitter have found that significantly reduces misinformation. No one is censored by being forced to click on a link before resharing it.
Thank you. I want to pivot back to Instagram's targeting of kids. We all know that they announced a pause. But that reminds me of what they announced when they were going to issue a digital currency. And they got beat up by the US Senate Banking Committee, and they said, never mind. And now they're coming back around hoping that nobody notices that they are going to try to issue a currency. Now, let's set aside for the moment the sort of the business model, which appears to be gobble up everything, do everything. That's the growth strategy. Do you believe that they're actually going to discontinue Instagram Kids, or are they just waiting for the dust to settle?
I would be sincerely surprised if they do not continue working on Instagram Kids. And I would be amazed if a year from now we don't have this conversation again.
Why?
Facebook understands that if they want to continue to grow, they have to find new users. They have to make sure that the next generation is just as engaged with Instagram as the current one. And the way they'll do that is by making sure that children establish habits before they have good self-regulation.
By hooking kids.
By hooking kids. I would like to emphasize one of the documents that we sent in on problematic use examined the rates of problematic use by age, and that peaked with 14-year-olds. It's just like cigarettes. Teenagers don't have good self-regulation. They say explicitly, I feel bad when I use Instagram, and yet I can't stop. We need to protect the kids.
Just my final question. I have a long list of misstatements, misdirections, and outright lies from the company. I don't have the time to read them, but you're as intimate with all of these deceptions as I am. So I will just jump to the end. If you were a member of this panel, would you believe what Facebook is saying?
I would not believe. Facebook has not earned our right to just have blind trust in them. Trust is, last week, one of the most beautiful things that I heard on the committee was trust is earned, and Facebook has not earned our trust.
Thank you.
Thanks, Senator Schatz. Senator Moran, and then we've been joined by the chair, Senator Cantwell. She'll be next. We're going to break at about 11:30, if that's okay, because we have a vote.
Okay.
And then we'll reconvene.
Okay.
Mr. Chairman, thank you. The conversation so far reminds me that you and I ought to resolve our differences and introduce legislation. So as Senator Thune said, let's go to work.
Our differences are very minor, or they seem very minor in the face of the revelations that we've now seen. So I'm hoping we can move forward, Senator Moran.
I share that view, Mr. Chairman. Thank you. Thank you very much for your testimony. What examples do you know? We've talked about particularly children, teenage girls in specifically, but what other examples do you know about where Facebook or Instagram knew its decisions would be harmful to its users, but still proceeded with the plan and executed those harmful behavior?
Facebook's internal research is aware that there are a variety of problems facing children on Instagram that are, they know that severe harm is happening to children. For example, in the case of bullying, Facebook knows that Instagram dramatically changes the experience of high school. So when we were in high school, when I was in high school, most kids
You
have—
looked at me and changed your
Yeah.
word.
Sorry. When I was in high school,
Nailed
most kids have positive home lives. Like, it doesn't matter how bad it is at school. Kids can go home and reset for 16 hours. Kids who are bullied on Instagram, the bullying follows them home. It follows them into their bedrooms. The last thing they see before they go to bed at night is someone being cruel to them, or the first thing they see in the morning is someone being cruel to them. Kids are learning that their own friends, like people who they care about them, are cruel to them. Like, think about how that's going to impact their domestic relationships when they become 20-somethings or 30-somethings, to believe that people who care about you are mean to you. Facebook knows that parents today, because they didn't experience these things, they never experienced this addictive experience with a piece of technology, they give their children bad advice. They say things like, why don't you just stop using it? And so that Facebook's own research is aware that children express feelings of loneliness and struggling with these things because they can't even get support from their own parents. I don't understand how Facebook can know all these things and not escalate it to someone like Congress for help and support in navigating these problems.
Let me ask the question in a broader way. Besides teenagers or besides girls or besides youth, are there other practices at Facebook or Instagram that are known to be harmful but yet are pursued?
Facebook is aware that choices it made in establishing like meaningful social interactions, so engagement-based ranking that didn't care if you bullied someone or committed hate speech in the comments, that was meaningful. They know that that change directly changed publishers' behavior, that companies like BuzzFeed wrote in and said, the content is most successful on our platform is some of the content we're most ashamed of. You have a problem with your ranking, and they did nothing. They know that politicians are being forced to take positions they know their own constituents don't like or approve of because those are the ones that get distributed on Facebook. That's a huge, huge negative impact. Facebook also knows that they have admitted in public that engagement-based ranking is dangerous without integrity and security systems, but then not rolled out those integrity and security systems to most of the languages in the world. And that's what causing things like ethnic violence in Ethiopia.
Thank you for your answer. What is the magnitude of Facebook's revenues or profits that come from the sale of user data?
Oh, I'm sorry. I've never worked on that. I'm not aware.
Thank you. What regulations or legal actions by Congress or by administrative action do you think would have the most consequence or would be feared most by Facebook, Instagram, or allied companies?
I strongly encourage reforming Section 230 to exempt decisions about algorithms, right? So modifying 230 around content, I think has it's very complicated because user-generated content is something that companies have less control over. They have 100% control over their algorithms. And Facebook should not get a free pass on choices it makes to prioritize growth and virality and reactiveness over public safety. They shouldn't get a free pass on that because they're paying for their profits right now with our safety. So I strongly encourage reform of 230 in that way. I also believe there needs to be a dedicated oversight body because right now the only people in the world who are trained to analyze these experiments, to understand what's happening inside of Facebook, are people who grew up inside of Facebook or Pinterest or another social media company. And there needs to be a regulatory home where someone like me could do a tour of duty after working at a place like this and have a place to work on things like regulation, to bring that information out to the oversight boards that have the right to do oversight.
A regulatory agency within the federal government.
Yes.
Thank you very much. Thank you, Chairman.
Senator Cantwell.
Thank you, Mr.
Thank you,
Chairman.
Senator Moran.
Thank you for holding this hearing. And I think my colleagues have brought up a lot of important issues. And so I think I just want to continue on that vein. First of all, the Privacy Act that I introduced along with several of my colleagues actually does have FTC oversight of algorithm transparency. In some instances, I'd hope you take a look at that and tell us what other areas you think we should add to that level of transparency. But clearly that's the issue at hand here, I think, in your coming forward. So thank you again for your willingness to do that. The documentation that you say now exists is the level of transparency about what's going on that people haven't been able to see. And so your information that you say has gone up to the highest levels at Facebook is that they purposely knew that their algorithms were continuing to have misinformation and hate information, and that when presented with information about this terminology, downstream MSI, meaningful social information, knowing that it was this choice, you could continue this wrong-headed information, hate information about the Rohingya, or you could continue to get higher click-through rates. And I know you said you don't know about profits, but I'm pretty sure you know that on a page. Yeah. If you click through that next page, I'm pretty sure there's a lot more ad revenue than if you didn't click through. So you're saying that documents exist that at the highest level at Facebook, you had information discussing these two choices, and that people chose, even though they knew that it was misinformation and hurtful and maybe even causing people lives, they continued to choose profit.
We have submitted documents to Congress outlining Mark Zuckerberg was directly presented with a list of, quote, soft interventions. So a hard intervention is like taking a piece of content off Facebook, taking a user off Facebook. Soft interventions are about making slightly different choices to make the platform less viral, less twitchy. Mark was presented with these options and chose to not remove downstream MSI in April of 2020, even though even just isolated in at-risk countries, that's countries at risk of violence, if it had any impact on the overall MSI metric. So,
money.
Yeah, he said.
Right? Was there another reason given why they would do it other than they thought it would really affect their numbers?
I don't know for certain. Like Jeff Horowitz, the reporter for the Wall Street Journal, and I struggled with this. We sat there and read these minutes and we're like, how is this possible? Like, we've just read 100 pages on how downstream MSI expands hate speech, misinformation, violence inciting content, graphic violent content. Why wouldn't you get rid of this? And the best theory that we've come up with, and I want to emphasize this is just our interpretation on it, is people's bonuses are tied to MSI. Right? Like people stay or leave the company based on what they get paid. And like, if you hurt MSI, a bunch of people weren't going to get their bonuses.
So you're saying that this practice even still continues today? Like, we're still in this environment? I'm personally very frustrated by this because we presented information to Facebook from one of my own constituents in 2018 talking about this issue with the Rohingya, pleading with the company. Yeah. We pleaded with the company and they continue to not address this issue. Now you're pointing out that these same algorithms are being used and they know darn well in Ethiopia that it's causing and inciting violence. And again, they are still today choosing profit over taking this information down. Is that correct?
When rioting began in the United States in the summer of last year, they turned off downstream MSI only for when they detected content was health content, which is probably COVID, and civic content. But Facebook's own algorithms are bad at finding this content. It's still in the raw form for 80, 90% of even that sensitive content. In countries where they don't have integrity systems in the local language, and in the case of Ethiopia, there are 100 million people in Ethiopia and 6 languages. Facebook only supports 2 of those languages for integrity systems. This strategy of focusing on language-specific, content-specific systems, AI to save us, is doomed to fail.
I need to get to one of them. First of all, I'm sending a letter to Facebook today. They better not delete any information as it relates to the Rohingya or investigations about how they proceeded on this, particularly in light of your information or the documents. But aren't we also now talking about advertising fraud? aren't you selling something to advertisers that's not really what they're getting? We know about this because of the newspaper issues. We're trying to say that journalism that basically has to meet a different standard, a public interest standard that basically is out there basically proving every day, or they can be sued. These guys are a social media platform that doesn't have to live with that. And then the consequences, they're telling their advertisers that this was we see it. We see it. People are coming back to the local journalism because they're like, we want to be with a trusted brand. We don't want to be in, your website. So I think your finding for the SEC is an interesting one, but I think that we also have to look at what are the other issues here. And one of them is, did they defraud advertisers and telling them this was the advertising content that you were going to be advertising in, when in reality it was something different. It was based on a different model.
We have multiple examples of question and answers for the advertising staff, the sales staff, where advertisers say after the riots last summer, we're asked, should we come back to Facebook? Or after the insurrection, like, should we come back to Facebook? And Facebook said in their talking points that they gave to advertisers, we're doing everything in our power to make this safer, or we take down all the hate speech when we find it. But Facebook's own—
And that was not true.
That was not true. They get
Thank
3
you.
to 5% of hate speech.
Thank you. Thank you, Mr. Chairman.
Thanks, Senator Cantwell. And if you want to make your letter available to other members of the committee, I'd be glad to join you myself.
Thank you.
And
Thank you.
thank you for suggesting it.
Thank you.
Senator Lee.
Thank you, Mr. Chairman, and thank you, Ms. Haugen, for joining us this week. It's very, very helpful. We're grateful that you're willing to make yourself available. Last week, we had another witness from Facebook, Ms. Davis. She came and she testified before this committee, and she focused on, among other things, the extent to which Facebook targets ads to children, including ads that are either sexually suggestive or geared toward adult-themed products or themes in general. Now, while I appreciated her willingness to be here, I didn't get the clearest answers in response to some of those questions. And so I'm hoping that you can help shed some light on some of those issues related to Facebook's advertising processes here today. As we get into this, I want to first read you a quote that I got from Ms. Davis last week. Here's what she said during her questioning. Quote, "When we do ads to young people, there are only 3 things that an advertiser can target around: age, gender, location. We also prohibit certain ads to young people, including weight loss ads. We don't allow tobacco ads at all, meaning to young people. We don't allow them to children. We don't allow them to minors," close quote. Now, since that exchange happened last week, there are a number of individuals and groups, including a group called the Technology Transparency Project, or TTP, that have indicated that that part of her testimony was inaccurate, that it was false. TTP noted that TTP had conducted an experiment just last month, and their goal was to run a series of ads that would be targeted to children ages 13 to 17, to users in the United States. Now, I want to emphasize that TTP didn't end up running these ads. They stopped them from being distributed to users. But Facebook did, in fact, approve them. And as I understand it, Facebook approved them for an audience of up to 9.1 million users, all of whom were teens. So I brought a few of these to show you today. This is the first one I wanted to showcase. This first one has a colorful graphic encouraging kids to, quote, "throw a Skittles party like no other," which, as the graphic indicates, and as the slang jargon also independently suggests, this involves kids getting together randomly to abuse prescription drugs. The second graphic displays an anti-tip. That is a tip specifically designed to encourage and promote anorexia. And it's on there. Now, the language, the anti-tip itself, independently promotes that. The ad also promotes it, insofar as it was suggesting these are images you ought to look at when you need motivation to be more anorexic, I guess you could say. Now, the third one invites children to find their partner online and to make a love connection. You look lonely, find your partner now to make a love connection. Now look, it'd be an entirely different kettle of fish if this were targeted to an adult audience. It is not. It's targeted to 13 to 17-year-olds. Now, obviously, I don't support, and TDP does not support these messages, particularly when targeted to impressionable children. And again, just to be clear, TDP did not end up pushing the ads out after receiving Facebook's approval, but it did, in fact, receive Facebook's approval. So I think this says something. One could argue that it proves that Facebook is allowing and perhaps facilitating the targeting of harmful adult-themed ads to our nation's children. So could you please explain to me, Ms. Haugen, how these ads with a target audience of 13 to 17-year-old children, how would they possibly be approved by Facebook? And is AI involved in that?
I did not work directly on the ad approval system. What was resonant for me about your testimony is Facebook has a deep focus on scale. So scale is, can we do things very cheaply for a huge number of people, which is part of why they rely on AI so much. It is very possible that none of those ads were seen by a human. And the reality is that we've seen from repeated documents within my disclosures is that Facebook's AI systems only catch a very tiny minority of offending content. And best case scenario, in the case of something like hate speech, at most they will ever get 10 to 20%. In the case of children, that means drug paraphernalia ads like that. It's likely if they rely on computers and not humans, they will also likely never get more than 10 to 20% of those ads.
Understood. Mr. Chairman, I've got one minor follow-up question. It should be easy to answer.
Go ahead.
So while Facebook may claim that it only targets ads based on age, gender, and location, even though these things seem
ASL.
to counteract that. But let's set that aside for a minute. And that they're not basing ads based on specific interest categories. Does Facebook still collect interest category data on teenagers, even if they aren't at that moment targeting ads at teens based on those interest categories?
I think it's very important to differentiate between what targeting are advertisers allowed to specify and what targeting Facebook may learn for an ad. Let's imagine you had some text on an ad. It would likely extract out features that it thought was relevant for that ad. For example, in the case of something about partying, it would learn partying is a concept. I'm very suspicious that personalized ads are still not being delivered to teenagers on Instagram because the algorithms learn correlations. They learn interactions where your party ad may still go to kids interested in partying because Facebook is almost certainly has a ranking model in the background that it says this person wants more party related content.
Interesting. Thank you. That's very helpful. And what that suggests to me is that while they're saying they're not targeting teens with those ads, the algorithm might do some of that work for them, which might explain why they collect the data even while claiming that they're not targeting those ads in that way.
I can't speak to whether or not that's the intention, but the reality is it's very, very, very difficult to understand these algorithms today. And over and over and over again, we saw these biases the algorithms unintentionally learn. And so, yeah, it's very hard to disentangle out these factors as long as you have engagement-based ranking.
Thank you, Ms. Haugen.
Thank you very much, Senator Lee. Senator Markey.
Thank you, Mr. Chairman, very much. Thank you, Ms. Haugen. You are a 21st century American hero, warning our country of the danger for young people, for our democracy, and our nation owes you just a huge debt of gratitude for the courage you're showing here today. So thank you. Ms. Haugen, do you agree that Facebook actively seeks to attract children and teens onto its platforms?
And Facebook actively markets to children or markets to children under the age of 18 to get on Instagram, and definitely targets children as young as 8 to be on in Messenger Kids.
An internal Facebook document from 2020 that you revealed reads, "Why do we care about tweens? They are a valuable but untapped audience. So Facebook only cares about children to the extent that they are of monetary value. Last week, Facebook's global head of safety, Antigone Davis, told me that Facebook does not allow targeting of certain harmful content to teens. Ms. Davis stated, "We don't allow weight loss ads to be shown to people under the age of 18. Yet, a recent study found that Facebook permitted targeting of teens as young as 13 with ads that showed a young woman's thin waist promoting websites that glorify anorexia." Ms. Haugen, based on your time at Facebook, do you think Facebook is telling the truth?
I think Facebook has focused on scale over safety, and it is likely that they are using artificial intelligence to try to identify harmful ads without allowing the public oversight to see what is the actual effectiveness of those safety systems.
You unearthed Facebook's research about its harm to teens. Did you raise this issue with your supervisors?
I did not work directly on anything involving teen mental health. This research was freely available to anyone in the company.
Ms. Davis testified last week, quote, "We don't allow tobacco ads at all. We don't allow them to children either. We don't allow alcohol ads to minors. However, researchers also found that Facebook does allow targeting of teens with ads on vaping." Ms. Haugen, based on your time at Facebook, do you think Facebook is telling the truth?
I do not have context on that issue. I assume that if they are using artificial intelligence to catch those vape ads, unquestionably ads are making its way through.
Okay. So from my perspective, listening to you and your incredibly courageous revelations time and time again, Facebook says one thing and does another. Time and time again, Facebook fails to abide by the commitments that they had made. Time and time again, Facebook lies about what they are doing. Yesterday, Facebook had a platform outage, but for years it has had a principles outage. Its only real principle is profit. Facebook's platforms are not safe for young people. As you said, Facebook is like big tobacco, enticing young kids with that first cigarette, that first social media account designed to hook kids as users for life. Ms. Haugen, your whistleblowing shows that Facebook uses harmful features that quantify popularity, push manipulative influencer marketing, amplify harmful content to teens. And last week in this committee, Facebook wouldn't even commit to not using these features on 10-year-olds. Facebook is built on computer codes of misconduct. Senator Blumenthal and I have introduced the Kids Internet Design and Safety Act, the KIDS Act. You have asked us to act as a committee. And Facebook has scores of lobbyists in the city right now coming in right after this hearing to tell us we can't act. And they've been successful for a decade in blocking this committee from acting. So let me ask you a question. The Kids Internet Design and Safety Act, or the KIDS Act, here's what the legislation does. It includes outright bans on children's app features that, one, quantify popularity with likes and follower counts, promotes promotes influencer marketing, and three, that amplifies toxic posts, and that it would prohibit Facebook from using its algorithms to promote toxic posts. Should we pass that legislation?
I strongly encourage reforms that push us towards human scale social media and not computer driven social media. Those amplification harms are caused by computers choosing what's important to us, not our friends and family. And I encourage any system that children are exposed to not use amplification systems.
So you agree that Congress has to enact these special protections for children and teens that stop social media companies from manipulating young users and threatening their well-being, to stop using its algorithm to harm kids. You agree with that?
I do believe Congress must act to protect children.
And children and teens also need a privacy online Bill of Rights. I'm the author of the Children's Online Privacy Protection Act of 1998. but it's only for kids under 13 because the industry stopped me from making it age 16 in 1998 because it was already their business model. But we need to update that law for the 21st century. Tell me if this should pass. One, create an online eraser button so that young users can tell websites to delete the data they've collected about them. Two, give young teens under the age of 16 and their parents control of their information. And three, ban targeted ads to children.
I support all those actions.
Thank you. And finally, I've also introduced the Algorithmic Justice and Online Platform Transparency Act, which would, one, open the hood on Facebook and big tech's algorithms so we know how Facebook is using our data to decide what content we see, and two, ban discriminatory algorithms that harm vulnerable populations online, like showing employment and housing ads to white people, but not to Black people in our country. Should Congress pass that bill?
Algorithmic bias issues are a major issue for our democracy. During my time at Pinterest, I became very aware of the challenges of, like I mentioned before, it's difficult for us to understand how these algorithms actually act and perform. Facebook is aware of complaints today by people like African Americans saying that Reels doesn't give African Americans the same distribution as white people. And until we have transparency and our ability to confirm ourselves that Facebook's marketing messages are true, we will not have a system that is compatible with democracy.
So I thank Senator Lee. I agree with you and your line of questions. I wrote Facebook asking them to explain that discrepancy because Facebook, I think, is lying about targeting 13 to 15-year-olds. So here's my message for Mark Zuckerberg. Your time of invading our privacy, promoting toxic content, and preying on children and teens is over. Congress will be taking action. You can work with us or not work with us, but we will not allow your company to harm our children and our families and our democracy any longer. Thank you, Ms. Hogan. We will act.
Thanks, Senator Markey. We're going to turn to Senator Blackburn, and then we will take a break. I know that there's some interest in another round of questions. Maybe, maybe we'll.
I'll do a summary in just a moment.
For his questions before.
Well, we've got Cruz and Scott.
And we have others, so
Yes.
we'll come back after the.
Mr. Chairman? I have to go to sit in the chair starting at noon today.
Why don't we turn just, you had
Yeah,
one question?
I do. I have one question. This relates to what Mr. Markey was asking. Does Facebook ever employ child psychologists or mental health professionals to deal with these children online issues that we're discussing?
Facebook has many researchers with PhDs. I assume some of them are, I know that some have psychology degrees. I'm not sure if they are child specialists. Facebook also works with external agencies that are specialists at children's rights online.
Senator Lujan, and then at the conclusion of Senator Lujan's questions, we'll take a break. We'll come back at noon.
Thank you, Mr. Chairman, and I appreciate the indulgence of the committee. Ms. Hogan, last week, the committee heard directly from Ms. Davis, the global head of safety for Facebook. During the hearing, the company contested their own internal research as if it does not exist. Yes or no, does Facebook have internal research indicating that Instagram harms teens, particularly harming perceptions of body image, which disproportionately affects young women?
Yes, Facebook has extensive research on the impacts of its products on teenagers, including young women.
Thank you for confirming these reports. Last week, I requested Facebook make the basis of this research the data set minus any personally identifiable information available to this committee. Do you believe it is important for transparency and safety that Facebook release the basis of this internal research, the core data set, to allow for independent analysis?
I believe it is vitally important for our democracy that we establish mechanisms where Facebook's internal research must be disclosed to the public on a regular basis, and that we need to have privacy-sensitive data sets that allow independent researchers to confirm whether or not Facebook's marketing messages are actually true.
Beyond this particular research, should Facebook make its internal primary research not just secondary slide decks of cherry-picked data, but the underlying data public by default? Can this be done in a way that respects user privacy?
I believe in collaboration with academics and other researchers that we can develop privacy-conscious ways of exposing radically more data that is available today. It is important for our ability to understand how algorithms work, how Facebook shapes the information we get to see, that we have these data sets be publicly available for scrutiny.
Is Facebook capable of making the right decision here on its own, or is regulation needed to create real transparency at Facebook?
Until incentives change at Facebook, we should not expect Facebook to change. We need action from Congress.
Last week, I asked Ms. Davis about shadow profiles for children on the site, and she answered that no data is ever collected on children under 13 because they are not allowed to make accounts. This tactfully ignores the issue. Facebook knows children use their platform. However, instead of seeing this as a problem to be solved, Facebook views this as a business opportunity. Yes or no, does Facebook conduct research on children under 13, examining the business opportunities of connecting these young children to Facebook's products?
I want to emphasize how vital it is that Facebook should have to publish the mechanisms by which it tries to detect these children, because they are on the platform in far greater numbers than anyone is aware. I do believe that, or I am aware that Facebook is doing research on children under the age of 13, and those studies are included in my disclosure.
You have shared your concerns about how senior management at Facebook has continuously prioritized revenue over potential user harm and safety. And I have a few questions on Facebook's decision-making. Last week, I asked Ms. Davis, quote, has Facebook ever found a change to its platform would potentially inflict harm on users, but Facebook moved forward because the change would also grow users or increase revenue? Ms. Davis said in response, quote, it's not been my experience at all at Facebook. That's just not how we would approach it. Yes or no, has Facebook ever found a feature on its platform harmed its users, but the feature moved forward because it would also grow users or increase revenue?
Facebook likes to paint that these issues are really complicated. There are lots of simple issues. For example, requiring someone to click through on a link before you reshare it. That's not a large imposition, but it does decrease growth a tiny little amount, because in some countries, reshares make up 35% of all the content that people see. Facebook prioritized that content on the system, the reshares, over the impacts to misinformation, hate speech, or violence incitement.
Did these decisions ever come from Mark Zuckerberg directly or from other senior management at Facebook?
We have a few choice documents that contain notes from briefings with Mark Zuckerberg, where he chose metrics defined by Facebook, like meaningful social interactions, over changes that would have significantly decreased misinformation, hate speech, and other inciting content.
And this is the reference you shared earlier to Ms. Cantwell, April of 2020.
The soft interventions.
Facebook appeared to be able to count on the silence of its workforce for a long time, even as it knowingly continued practices and policies that continue to cause and amplify harm. Facebook content moderators have called out, quote, a culture of fear and secrecy within the company that prevented them from speaking out. Is there a culture of fear at Facebook around whistleblowing and external accountability?
Facebook has a culture that emphasizes that insularity is the path forward, that if information is shared with the public, it will just be misunderstood. And I believe that relationship has to change. The only way that we will solve these problems is by solving them together. And we'll have much better, more democratic solutions if we do it collaboratively than in isolation.
And my final question, is there a senior level executive at Facebook, like an inspector general, who's responsible for ensuring complaints from Facebook employees are taken seriously and that employees' legal, ethical, and moral concerns receive consideration with the real possibility of instigating change to company policies?
I'm not aware of that role. but the company is large and it may exist.
I appreciate that. It's my understanding that there's a gentleman by the name of Roy Austin, who is the Vice President of Civil Rights, who's described himself as an Inspector General, but he does not have the authority to make these internal conflicts public. The Oversight Board was created by Facebook to review moderation policies related to public content specifically. It was not created to allow employees to raise concerns. So again, another area of interest I believe that we have to act on. I thank you for coming forward today.
My pleasure. Happy to serve.
The committee is in recess.
Okay, let's go ahead and do a summary of what we've got so far. There is going to be a part 2. I probably won't cover the part 2. We've got a pretty good subset so far of information on what was said here during the hearing. So let's go ahead and review it. All right, let's see here. There we go. Okay, perfect. Okay, folks, here is a summary of part 1 of the testimony of Frances Hogan, 37 years old, product manager, former product manager at Facebook. She's got a degree from Harvard, and this is a summary of what she mentioned to the Senate today, or the Senate hearing committee. So Frances Hogan mentions that Facebook repeatedly misled the public about what its own research reveals about the safety of children and the efficacy of its artificial intelligence systems as a role in spreading divisive and extreme messages. She says that Facebook has the potential to bring out the worst of us, but could also bring out the best of us if we had proper controls for Facebook. She believes that Facebook harms children, stokes division, and harms democracy. She says that Facebook puts profit before people, and that they will not solve the problems they have without the help or compelling of Congress. She says that Facebook resolves conflicts within the company in favor of its own profits rather than what is best for society. Later, she mentions that Facebook pays for their profit with our safety. She says the results are more profit for Facebook, but more lies and more combativeness in our society. And sometimes this actually leads to violence. She mentions that the company intentionally hides vital information that could potentially lead regulators to pay attention to Facebook more. She says that Facebook purposefully hides behind walls that keep researchers out. This is different from what Google does, for example, where researchers can access data and do more research, a comparison she made. These problems, she says, are very solvable, and she gives some suggestions for how to solve these issues, which we'll talk about in just a moment. She also mentions that most children who use Facebook probably don't have the self-awareness to recognize the true issues of what Facebook is actually doing to them and how Facebook is actually hurting them. She mentions that Facebook Facebook says that children lie about their age, but the reality is statistics within Facebook show that most children tell the truth, and you could figure out most children's actual ages by doing some backward analysis. And she mentions that the real problems at Facebook, beyond people potentially lying about their age, because this was a question that came up, were really staffing related, that there aren't enough humans involved in decision making or problem solving at Facebook. And so ultimately, when there's understaffing, groups within Facebook are discouraged from actually trying to solve the issues because that could potentially lead to more work when they're already overwhelmed. So, for example, Frances mentioned that she was on a counter-espionage group or cell or whatever, and at any given time, she said they could only deal with 1/3 of the caseload they had. If they would work on building a better detector to find more problems, then they would just be even more overwhelmed and even more behind. And so she cites a lack of humans and a lack of staff as some of the problems of the issues that we have at Facebook. She says that her goal is to fix Facebook. However, Facebook should declare moral bankruptcy. She mentions that some things that could help are things like the Kids Act. The Kids Act, by the way, are things, or is an act that would limit things like autoplay, push alerts, and like buttons, or even follower counts for children. There was a mention that Facebook's Q2 revenue per user is $35.58 annualized. That would be over $135, which is pretty incredible. Actually, probably over $140. Senator Klobuchar says that algorithms are likely to promote outrageous content, to which Francis says absolutely. Facebook uses engagement-based content algorithms that basically amplify extremes. And in reverse engineering, Facebook found that it could actually lead people in studies to do or act a certain way. So, for example, when the question was asked, can Facebook's algorithm lead people to anorexia? She said the answer was yes, that research had shown that Facebook has that power, which is kind of incredible to think about, that Facebook could essentially manipulate you by catering certain messages to you. Facebook invests more in its users that make them more money, she says, specifically in the English language. She talked a little bit more about the algorithm, the engagement-based ranking algorithm. She counters what Facebook might say. She believes that Facebook would say that Facebook says you won't like Facebook as much if we didn't cater content for you. She has more of a preference, saying that, hey, maybe we don't need algorithms to cater content for us. Maybe we could go time-based on the way we view content in a feed. But we've also seen that, by the way, at like YouTube. Remember back in the day, and I'm making this reference here, back in the day, YouTube was very subscription-based. If you subscribe to a channel, you would see a list of all the videos from your subscriptions. But YouTube found that that didn't actually increase viewership. Instead, providing you content that wasn't necessarily from your subscriptions list, but what was most deemed to get the most view time from you, ended up growing the platform substantially more. And so that's why they switched to that sort of platform. I imagine Facebook has found very much the same thing to be true, that catered content increases engagement, and that's why they use that. The problem is the content that Facebook is likely to promote is content that's likely to, quote, elicit an extreme reaction from the user, because in that case, it's more likely to generate likes and shares, leading other people not only to view and consume that content and then potentially share that content, but also promoting other people to create content. And so on YouTube, it's worth noting that when YouTube suggests a video to you, it's because each video has a predetermined or pre-estimated watch time per impression. And so every time they show you a thumbnail, they assume that on average, you're going to spend 5 minutes here, 10 minutes here, 8 minutes here. But that watch time per impression is really important because it also calculates how likely you are to share that video. Because see, if you watch a video for 8 minutes and don't share it, that's 8 minutes. If you watch a video and share it with a person who then shares it to another person who shares it to another person, that could be 24 or 32 minutes of watch time per that one impression they gave you, right? So they're looking for that sort of outrageous or extreme content. YouTube does pretty much the same thing. Facebook says it's artificial intelligence can find bad content, Francis says, but she argues that you can't rely on artificial intelligence to solve these issues or to find bad content, because in her research, they found, and on sort of groups that she's worked on, they found that AI was only about 10 to 15% effective at actually finding content that violated the terms of services or was bad content on Facebook. And so she believes that it's very important for not only research to be shared with Congress, but Congress to provide oversight to Congress. Maybe even Facebook can create suggestions for how that oversight should look, and Congress can collaborate on that sense. She was also a big fan of what Twitter's doing with link sharing. When Twitter, when somebody posts a link and somebody wants to retweet that, Twitter has a little notification that pops up and says, you haven't read this. Do you want to read this article before you reshare it? Facebook, she says, doesn't do this because that would reduce shares, and Facebook likes shares, so they don't want to stand in the way of people sharing content. She doesn't believe that you having to click on the article before sharing it is actually a form of censorship. Instead, she says, hey, like, this is a good way to help prevent mis or disinformation. Now, let's see here. She also mentions, and I thought this was very interesting, another senator came up and brought up some examples of how Facebook's ad review had failed a few times. I actually have that up right here. And here's an example. So This is by the techtransparencyproject.org, the TTP, referenced by a senator during the hearing. And they submitted this ad targeted to 13 to 17-year-olds. They never ran these ads, but they just wanted to see if these ads would get approved. And so here's one. It says, "It's time for some Skittles. Are you in?" And it's a picture of a bunch of drugs. Throw a Skittle. Here's one that shows a picture of a skinny girl and says, "When you're craving a snack, visit pro-anorexia sites to feed your motivation and reach your goal," except they shorten anorexia and just call it Anna, and then they call it an Anna tip, and how this got approved. Or here's some other dating or gambling or alcohol or smoking ads that got promoted to 13 to 17-year-olds. And they show how quickly these were approved. Potential reach of 9.1 million 13 to 17-year-olds. And they submitted these ads and got basically approval within, at exactly the same time, within about an hour. Within an hour and 1 minute, all of these ads were approved. And look at that. All of the ads were approved at exactly the same time. See that here, this 12:41 p.m. Approve, 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 approve. All of them at exactly the same time. Now, Frances, it doesn't work on these particular ad teams, but she believes that it's likely that algorithms are approving these and that it's very unlikely that humans are looking at all of these ads. And if Facebook is relying on algorithms to review ads, then it's likely that only 10 to 15% of bad ads are actually caught, which is a problem. And especially when she believes that Facebook creates mental health issues for not just women, but also children in general, which we've seen through the Wall Street Journal expose, where there's ample evidence of mental health deterioration in individuals who are children, especially girls, but also boys. And one of the issues that she cites is suggesting that parents don't really know how to help their children because they didn't really grow up with social media. They might say something like, "Hey, just stop using Facebook," but that would be bad advice because people have a temptation to continue to resort to social media because of the way our brains are wired, the dopamine release of every time we check our phone. And so she says this is an issue because when you wake up in the morning, you see people who are cruel to you. When you go to sleep at night, you see people who are cruel to you through Facebook. And this is very different from how bullying, for example, used to work. Bullying in schools didn't used to follow you home. Now it follows you home wherever you are. And you don't get a break from that sort of bullying. And that continues to, unfortunately, perpetuate negative mental health for children. She's a big fan of promoting oversight and regulation to Section 230, the Communication Decency Act. She mentions that platforms like Facebook have 100% control over their algorithms, and algorithms should not prioritize growth at the sake of or at the expense of public safety. She also mentions that 80 to 90% of sensitive content in terms of swear words somehow still makes it through Facebook algorithms, and Facebook algorithms are especially bad at identifying inappropriate content in other languages, but they're also very bad at identifying inappropriate content in English. Then we have, let's see, we talked about the ads already, and she mentions that Facebook has a focus on scale. How can we do things cheaply and fast? It's very possible that a lot of content on Facebook is never reviewed by, that's submitted like for ads, in this case was for ads. She believes it's very likely and very possible that most ads are not reviewed by humans. We touched on that already. She believes we need to, quote, human scale social media, not computer scale social media. This kind of goes back to not having enough staff. And, my sort of takeaway was really that, in her opinion, AI, artificial intelligence sucks at preventing the negative from exploding on Facebook, that algorithms have too much biases or have too many biases, and that left unchecked, you end up with, like she mentioned in her opening remarks, more divisiveness, more potential violence, more bullying, more mental health problems. And so this gives you a summary of the first and longest part of the Senate testimony from Frances Haugen. I expect the second part to be relatively similar, but this gives you part one. So thank you so much for watching. If you found this helpful, consider subscribing. And folks, we'll see you in the next one. And everyone for the live stream who hung out with me for almost 3 hours now, thank you very much. I'm going to have breakfast, and then we'll be doing a course member live stream. Thank you so much for being here, and we'll see you soon.